shareholding, and currently the promoter group holds around 74% stake. Also, the company hasn't mentioned the floor price yet for this acquisition. Now, the key reasons for the delisting is that the company believes the company must have the full ownership of the operational performance, and also the company believes that it will provide a greater flexibility in operational terms, which will also lead to lower compliance cost. Looking at the Jindal Photo's investment portfolio, so majority of the economic exposure is towards the power sector, where Jindal Photo holds 20% stake in Jindal India Power Tech Limited and 33% stake in Mandakini Coal Company Limited. Apart from that, it also holds around 18.6 lakh shares of Jindal India Power Limited. In terms of stock performance too, the company has been doing pretty well and has been seeing positive returns on 1 month and weekly basis too.
Right. Mr. Chokhalingam, any view on Jindal Photo here?
It is basically a holding company.
Right.
90% of the balance sheet is in investments, as your colleague mentioned, the power company. But I was not able to get the exact, the valuation for these investee companies. But roughly, if you look at the current market cap, which is around 1,256 crore, the book value in the last balance sheet for these companies comes to close to 1,000 crore. So I think the valuation is fairly fair, current price. So as an investor, if I am holding the stock, I would sell if the stock goes up further 5-10%.
Okay. And Mr. Chokhalingam, thank you for joining us and giving us your perspectives on the stocks that we discussed on this show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all those stock-related queries that you might have at this point of time. So do start sending in those queries on the numbers that are flashing on the top of your screen. You can also call us on the landline number, as well as speak directly to our guests for those stock-related queries as well. But it's been a very interesting day, to say the least, for the markets, because we've largely continued to be below that 24,000 mark for the index. We even slipped below the 23,900 mark, yet again recovered those. So the last 90 minutes of the trading session continues to be very important. The heat map shows you the divergent trends that are visible in the auto pack right now. Now, Eicher Motors continues to be down and out today, down 4% on the back of the Delhi EV policy. We'll put the stock in focus in our next show, which is India Market Close. But on the other hand, there is a clear divergence visible with Maruti Suzuki. Now, there hasn't been any kind of direct benefit coming in on hybrids, which you would expect from Maruti Suzuki. But that big brokerage update coming in from Jefferies has pumped the stock above that 14,000 level, and very important to do so, because it's been a really long time since Maruti has traded above that level now. Titan, Tata Motors PV, Adani Enterprises, Bajaj Finance and Adani Ports are some of the other gainers for the Nifty 50 as well. When you look at the sectoral heat map also, because of this, you're seeing Nifty IT being the biggest loser, and that's continued to do so as well. Auto, largely because the Maruti has continued to be sideways, to say the least, because we would have expected a bigger move there. But the Nifty consumer durable and defense continue to be the top gainer, so is the realty. And there is, in terms of the advanced decline ratio, that's the other important factor. Now, in the morning, roughly around 1,400 stocks were advancing in trade today versus 1,100 declines. That has slightly increased to almost 1,600 stocks now. The mid-cap, small-cap index showing you that trend, and so is the BSE 500 also. So mid-cap 150 now at almost the highest point for today. Small-cap is also there with up a 0.6% increase, and the individual names as well. Now, that's led by Quest Corp as well as Gland Pharma and Maruti Suzuki, of course, visible there as well. Solar Industries is also showing a very good move, while ZF Commercial, also one of the impacted stocks, to say the least, in the auto pack as well. But let me welcome in our guest who will take your stock-related queries. Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Sher Khan, and Tapan Doshi, Research Analyst at CA.in, joining in. Now, both of you gentlemen, thanks so much for joining in on this Tuesday afternoon. The first stock-related query coming towards you, and this one is from Navindu Sharma, who is writing to us from Patna. He's holding Leela Palace at the IPO price and asking a 1 to 3 year view on the stock now. Tapan, good afternoon. Welcome to the show. We've largely seen, in terms of Leela Palace, being in that 4 to 450, 480 kind of zone. Would you recommend Navindu to continue holding the stock for now, and what's your recommendation?
See, hospitality sector is doing well now. If you see the revenue growth guidance is almost 10 to 12%. EBITDA margin going on also maybe above 50%. Of course, they have a high debt, but I think they will able to control. That is what the management is saying. And luxury travel demand is cyclical, but I think coming quarters things will be better. They have already have 1,000 keys pipeline. So overall, I think things look good here. Asset light expansion model is there. So please hold this stock. Even I'll say that if it goes down, you can add it more.
Got that view, but let's go across and take our first caller for today. This is from Mysuru, and Mohan is dialing in for a stock query. Mohan, good afternoon. Welcome to the show. What's your query?
Good afternoon. I just bought 10 shares of Gabriel, 1,100. I just want to know, can I add this share for long-term perspective?
Long-term perspective, got it. Well, let me go across then back to Tapan. Tapan, Gabriel, another big beneficiary of the auto growth that we've seen since the GST rate cuts. Should he continue to hold?
Yeah, totally agree, Puneet. This company will be beneficial. If you see premium vehicle demand is quite strong, and EV suspension opportunity is quite big, going up, and export also opportunities for this company is going up. Capacity expansion is already underway. So only thing that OEM concentration remains high. But if you see the balance is debt free and strong OEM relationship, so yes, he can add more as in when it goes down, but hold this stock.
Hold the stock, got that view. But the next question coming in from Raj, and he wants to know about Rain Industries, asking if it's a good buy at this point of time at the current levels. Kunal, welcome to the show. Would you recommend buying into Rain Industries right now?
Good afternoon to everyone. So I think if you look at the long-term chart for Rain Industry, it has already given us a breakout when it surpassed the hurdle of 173, 174 on the upside. So now that will become a support, currently trading at 182. So if we get that dip in the market towards that 175, 170 zone, I think ideal level to enter into the stock. I'm expecting the stock to go again back towards 220, 230 on the upside.
On the upside, got that view. The next question now coming in, and this one specifically is coming in between a couple of counters. So IEX as well as UTI AMC, and Jayashree from Coimbatore wants a 2-year view on what's a better pick. Now, Tapan, the challenges continue on IEX in terms of the regulatory nature. Is UTI one of the preferred picks in the AMC space? What's your opinion?
Yeah, I agree with you, because UTI AMC is much better situation. If you see the AUM growth will be better from here, SIP inflow is already strong, and operating leverage will be improving from here. I know UTI AMC has not performed compared to other AMC, but I think valuation is much better. IEX still, I feel a lot of headwinds are there, so better go with UTI AMC for long term.
Got it. The next question coming in now, and this one is on IDFC First. Viewer Ramanan from Tamil Nadu is holding these shares at 83 rupees and was holding 1,500 odd shares right now. He's asking if it's advisable to hold at this point of time. Kunal, very, very sideways momentum since that, on the fundamental side, that fraud that happened and just lost the momentum, right? Is it advisable to hold right now?
I think even if you want to hold from a medium-term perspective, I think 77 on technical front, that should be a stop loss. That is where the key averages are there. If that is breached on the downside decisively with volumes, then probably we'll be seeing the stock heading towards 67, 68 on the downside. So if it's holding at 83, keep a strict stop loss of 77 on a closing basis.
77, got that view. The next question, and viewers, you can also call us for your stock-related queries as well. The landline number for that is flashing on the top of your screen right now. And this one's on Genus Power. Again, a counter that our viewer wants to enter. Now, there was a block deal in the morning, and hence you saw a larger impact on Genus Power. Let's pull up that counter now. Kunal, a view, because stock's down 8.5% today. Is it a good entry level to look at this point of time?
I think too early to say at the current levels. 295, 300 has been the support zone earlier, and we are exactly trading at those levels. Need to sustain above this for the next couple of weeks, and then probably you can see some base formation happening, but currently no view on the stock.
No view on the stock, got it. Also, Kunal, on Titagarh as well, because Aniket, who's writing to us from Karnataka, wants to he's holding shares at 844. There's been a 6% up move in the last 1 month or so. Should he book out at this point of time, or would you recommend him to continue holding?
So depending on what his time frame is, if it is a short-term time frame, then probably one can book at the current levels. But if it is a long-term where he is looking at for investment for the next 1 year of perspective, then I think it's a very good bet to continue on the long side. 968, 970, this has been the major hurdle for the stock on the upside. And once that is taken out, then we can expect a good rally toward 1200 on the upside. So the larger term trend is bullish, but from a short-term perspective, since the stock has rallied a lot, it can cool off, come down to the averages around 800, and then probably resume the uptrend.
Got that view, Kunal. But let's go across, take the next caller from Mumbai. And Kezad has a stock query for us. Kezad, good afternoon. Welcome to the show. What's your query?
Hi, good afternoon. My query is for RailTel. I have bought this stock when the market was at the peak at 440 levels. I have bought 1,000 shares of RailTel, and I'm a long-term investor, minimum 10 years. So what should be the price I'm looking after 10 years? That is number one. And there is a steep correction at the moment, around 30%. Which I understand, but in the long term, will everything be good for the company? And how is the company progress coming up in the next 10 to 12 years? That is what I would like to know.
And Kunal, fair question, but also, Kehzad, how big of this position is right now in your portfolio? I mean, I can see that you're holding 1,000 shares, but is it more than 20% of your portfolio?
No, this is the particular investment I have done, and I have kept it for for 5 lakh rupees, which I have long-term perspective. This is the only one I have.
Got it.
I have a multiple shares, but this is like a big chunk of investment which I've put in this company.
Fair, Kehzad as well. But so let me get in both the views as well, because one on the fundamental side, Tapan, would you recommend Kehzad to just continue holding because his time frame is almost 10 years? RailTel, in that sense, has been slightly underperforming as well, which is, in terms of financials, while FY26 was strong, the margin profile has changed materially compared to the last 3 to 4 years. So what's your opinion on the stock? Should he continue to hold and also his position because he's bought it at 440?
See, my advice will be just wait for 1 or 2 quarters more. Because if you see their government order dependency is high, sir, where any variation that it will have an impact. Again, most of them, execution delay is happening for this company. Working capital intensity is on a high, but of course, in future, demand is also good. BharatNet opportunities, data center business expanding, so all that is good. So my take is at least wait for 2 quarters more. Order book is strong, and railway digitalization is happening. That is also helping. So currently, fundamental looks okay with me. Just wait for 1 or 2 quarters more, then evaluate again.
Got that view, but take another call now. This one, hopefully, Kehzad, that answers your question. Let's go to Gopinath now from Tirupati asking us a question. Gopinath, good afternoon. What's your query?
Good afternoon, sir. I have 10 shares of OFSS, Oracle Financial Services, at the average rate of 7,000 rupees.
Okay.
So what is the long-term perspective for that? Can I hold it or can I book profit? That's all.
Well, Gopinath, thanks so much for calling in, and many congratulations on the gains as well. Tapan, would you recommend him to ride this wave on Oracle Financial?
Well, this is the one stock which is quite moving in IT. But yes, if you see the global core banking demand is quite steady and a cloud-based banking adoption is rising, so which is helping this company. I think things will be better. The management is quite hopeful that in coming quarter things will be better also. Don't add any stock, but yes, ride this trend with a stop loss, maybe 15% down.
Got that view. The next question coming in now, and this one's on Deepak Nitrite. Now, our viewer has bought shares at 1680, and this is Thomas George from Cochin. Now, Kunal, since his buying price stocks down to 1550 odd levels, he's asking if this is a falling knife. I don't know if that 7, 8, 9% move would consider a falling knife, but what's your opinion on the stock now?
Yeah, I think for the stock, 1500 is a very critical level to be hold on to. If that is breached on the downside on a closing basis, then probably you will see further selling pressure. Even the recent low, what we had seen the recovery from 1300 to almost 1800, 1900 on the upside, that will fizzle out. So if he's holding, my advice would be to continue hold with a strict stop loss of 1500 on a closing basis. If that is triggered, then exit your losses.
Got that view. The next question now, and this one's on Fujiyama. Now, our viewer has bought, Christopher from Chandigarh, has actually bought these shares at 325, so very close to the current market price. He's holding 1400 shares. And Tapan, he wants a 3-year view on the counter. What would you recommend? A recent listing, but how are you viewing the space? Is this a preferred pick in the renewable energy space?
See, of course, it's a currently preferred take, and the only thing is whether they are able to maintain the margin or not. Of course, rooftop solar demand is accelerating, and 2027 demand will be also good. For them, the distribution network is doing good. The only thing is raw material price volatility and competition from the larger players. So that is where my question is whether he'll be able to hold the margin or not. Otherwise, if you say healthy ROE, cash generation is good, and beneficial of PM Surya Ghar Yojana. So I think hold the stock, but as I told, just have an eye on the margin. If that goes down, then he should get out.
Got that view. The next question now, and this one's from Mr. Setti, who's writing to us on E-cos Mobility, a smaller name. We don't discuss this too much, but he's holding these shares at 190, holding 240 of them. It's been in a very sideways. Let's look at the year-to-date chart also. Not too much happening today. But Kunal, a lot of promise, I think, during the IPO as well, but since then has re-rated quite substantially. Is there any momentum? Should Mr. Sethi hold till his buying price? What would you recommend?
Sorry, I'm not able to find the stock and neither the ticker for the stock.
Okay, I'll just check that for you. But Tapan, in the meantime, I don't know if you tracked the listing at that time, the Shofu service driven business, but any view on the counter?
See, valuation is quite above the historical average. Now, if you see the premium corporate segment, they are depending on that only. And now slowdown impacts the business travel also. That will have a future impact. I think airport mobility demand will be there, but one good thing is that it's an asset-light model. So currently hold it, but honestly, I'm not too much sure about this. So 1 quarter more, otherwise, please get out from the stock.
By any chance, could you view this, Kunal? The code is ECOS MOBLTY.
No, sorry, I'm not able to find it.
No worries. We'll come back to you, Kunal, with on the E-cos Mobility. But the next question coming in, and this one's on HDFC Bank, becomes and continues to be a retail favorite counter. And Ajay from Pune is holding 5,000 shares of this particular counter. It's almost 25% of his portfolio. Now, we've seen multiple changes here as well, right, Tapan? A new CFO being appointed. He's also a well-known name in the industry. Is there enough evidence now to continue holding the stock for Ajay? And or maybe he should add some more, if in the banking space, any other name also that you would recommend?
I think if he wants to go for large cap, no, I think ICICI Bank and SBI is also another option where he can transfer some fund. Because I feel the stock is good. I am not saying not good, but it will be slow mover. Of course, the positive development today happened. In future, no, maybe loan growth will be 10 to 12%. But they are seriously, credit growth is much lesser than other private banks and all that. And if you see the merger synergy is still, it's not visible. So my take is allocate some fund to ICICI Bank and SBI also. As is, I think he wants to go for large cap. That's why I'm talking about these two names.
Got that view. The next question, and this one's coming in on Wockhardt. Kiran Kumar from Hyderabad is holding shares at 1975, holding 108 shares, asking what he should do with this counter. What would you recommend here, Tapan? Of course, Zenic being a very important drug, should he just continue to hold?
Yeah, please hold it. Now, if you see the specialty portfolio is expanding, even global antibiotic demand is rising. Some licensing opportunities also coming up. The main thing is they are spending good in R&D. So innovation-led growth strategy is there already with the company. So yes, I'm quite positive. Company is good. So please hold this at this level also.
Shankar from Tirupati wants an opinion on JK Enterprises. It was one of the key stocks that continued to be in focus a few months ago. Let's look at the year-to-date chart, the one-year chart also for JK Enterprises. Now, he is currently sitting on a 15% loss in this particular counter. Kunal wants to know if he should, continue to hold. It's trading at 176 odd right now. But this year itself has been sideways momentum. What would you recommend? Should he still hold for that 15% to come back?
Sorry, I'm again not able to find this stock as well. JK Enterprise, right?
Yeah, it's JAYKAY should be the ticker name on NSE. I think and continue to be in news flow. I think, and hence we've picked up this counter. But any luck there, Kunal?
Yeah, I found it. Again, for JK Enterprise, what we have seen that already there has been the top out signals on the stock around the mark of 205, 206. From those levels, it has been trading in the lower top, lower bottom formation. Key levels to watch out for here is 165. If that is breach on the downside, then the fall could be severe and the stock could glide towards the mark of 140 on the downside. So if it's a holding long, keep a strict stop loss of 165 on the downside.
And Kunal, any luck on E-cos Mobility as well? Because any view that you can offer there as well?
Still, I have not been able to find E-cos.
I think I'll touch base with you offline and Kunal on that one. But let's start the rapid fire round now, and Kunal as well as Tapan, drill. First question coming in on Paras Defense. Our viewer Lakshmi is holding shares at 670, and he's holding 25 shares. So almost doubled the money. But Tapan, should she continue to hold or book out?
No, hold.
Next question coming in, and this one continues to be, and actually no, we've answered this question, but on Vedanta Iron and Steel, our viewer Vijay is holding shares at 28. Now I think it's one of the beneficiaries of the demerger is what Vijay is. What would you recommend here, Tapan?
Yeah, currently hold, valuation is okay.
Next question coming in from Jay Krishnan. He wants a 6 to 9 month view on MTAR Tech. Now Kunal, we've seen some momentum, respite quite and meaningfully so. But what's your opinion on MTAR now?
I think one of the biggest outperformer what we have seen in the last 6 to 8 months. So again, if he's holding from the lower levels, continue to hold the stock. From a trailing stop loss perspective, 6,200 should be the trailing stop loss on the downside.
Also, Kunal, on persistent systems. Now, yesterday stock was down 11%. I think today also largely sideways. Vijay from Chennai wants to know if it's a good time to enter for the medium term.
I think definitely no. Again, if you get bounces, that would be an opportunity to exit the stock or probably short. We can see the stock again gliding towards the mark of 3,800 on the downside.
3,800. It's a level that we've not seen on persistent for a while now. So important call coming in from Kunal there. Next question coming in on Rane Madras. Again, a smaller ancillary name there, Tapan. Would you recommend venturing into it or go for a more bigger name in the auto ink space?
No, I think better to go for a bigger name and like Uno Minda or something like that.
Got it. Finolex Pipes bought at 130 by Ajay. He wants to know if he can hold on for the long term as well. Tapan, would you recommend that?
Currently hold.
Hindustan Copper, JSW Energy, what's a better pick to enter now is what Srinivasan is asking. What's your view, Kunal?
Just a sec. I think JSW Energy looks much stronger compared to Hindu Copper at the current level, and one can see some decent upside at least towards the mark of 620-630 on the upside.
Got it. Well, got the view, Kunal, and that was the last question of the rapid fire as well as this edition of the show. Tapan as well as Kunal, thanks so much for joining in and helping us with the stock related queries. But viewers, out of time on this show, thanks so much for watching. India Market Close comes up next.
Superstar Stocks of the Day, presented by Tata Azura, Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
बरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com. is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome to NDTV Profit. You're watching India Market Close. I'm Hiral Dadia. Very interesting day in terms of markets because you've seen those gyrations that have happened from the day's highs of 24,035. We've given up those kind of gains, but this sudden spike that is coming in right now, you've reclaimed 23,950 mark in intraday trade. So that is the interesting point to watch out for. Let's quickly look at Bank Nifty as well, and then we'll look at the advanced decline ratio as we speak. If you look at the Bank Nifty, a similar kind of spike which is coming in here, though we are still some points away from the day's highest levels of 58,011. We are below that 57,750 mark in terms of Bank Nifty. Let's look at individual counters or even in terms of the heat map for Nifty 50 to just understand as to what's happening in terms of individual stocks. Maruti Suzuki, 5.5% up move, and this stock, Jefferies has put out a note as well. They've increased the target price on the counter. Titan has seen that sudden uptick that has come in. Tata Motors, PV, Bajaj Finance, in fact, that stock will be trading ex-dividend in today's session. 3 Bajaj companies, or 4 of them are trading ex-dividend. Adani Enterprises, Eternal, Adani Ports as well. And this is on that $1.4 billion stake sale. That stock is up in trade. Bharti Airtel, Nestle, a pretty mixed picture is what you're seeing in terms of individual counters. However, on the downside, Eicher Motors bearing the brunt, 4.5% downtick, and this is on the back of the New Delhi EV policy that we're talking about. You have IT, which continues to see the pressure. TCS, Infosys, Wipro, Tech Mahindra, as well as HCL Tech. In terms of consumption names as well, you have HUL, ITC, and a Tata Consumer. All of these three that have been trading under pressure. In terms of other heavy weights, if you look at a Reliance Industries, a 0.3% downtick is what you're seeing there. From the PSU banking space, you have SBI, which is slightly under pressure. Axis Bank also seeing cuts of nearly 0.2%. Let's quickly look at the advanced decline ratio, and then we'll look at broader markets as well. In terms of the advanced decline ratio, you have 1,600 advances. Clearly, the gap is broadening, and that is the beauty over here, Tamanna. I mean, the range that you're picking up in terms of the advances versus the declines pretty much in favor of the advances. However, your benchmarks, again, not doing very well, but that initial spike that we are seeing right now is encouraging.
Yeah, but you also have your monthly expiry, which is taking place today, and which is why you'll see some volatility in the benchmark. A bit of a spike there now, and let's see how it sustains. I think the story also is what happens in the broader markets. And let's just pull up the mid cap and the small cap. There is no problem there. There's 0.73%.
And that's what your advanced decline ratio is indicating, right?
Absolutely. The small cap 250 also doing well. Let's pull up the sectoral heat map and see where that strength is coming from. Because you had some improvement in the auto pack, but it's reality who's really ruling the roost today. India Defence is doing well. Consumer durables on news that Dixon, etc. are going to get their JV nod. So that was doing well as well. Autos are doing fine. And actually, it's the Nifty IT. If I remove remove the Nifty IT from the picture, the rest of the market is not that bad. 2.5% down on the Nifty IT, which is why that muted kind of impact on the Nifty as well because of its outsized weightage there.
We should look at the contributors as well, and that'll exactly
on the Nifty.
Because if you look at the contributors, that'll exactly tell you what Tamanna is talking about.
Yeah.
I mean, there you go. Infosys, TCS. You have a ICICI Bank, you have a ITC from the other sectors. However, what is interesting is a Maruti Suzuki. One-sided move is what you're seeing in terms of Maruti in today's session. Bharti Airtel, in fact, Bajaj group of companies, I think 3 or 4 of them are trading ex-dividend, and that's the impact that you're seeing in terms of the stock price. Titan has also seen a interesting surge in today's session, in the second half of the day. So I think the markets are trying to get there, but there is something which is pulling them down, and I think it's mainly the expiry day impact that we're seeing.
Yeah, and because Brent is benign, we'll pull up Brent in a bit. Europe is doing okay, but these are some of the other triggers this afternoon on Dalal Street. The Nifty is holding on to crucial support levels of 23,850 to 23,900 on expiry day. The broader structure is constructive as long as the Nifty holds above the 23,800 mark. So that support is important. It's a decisive one. 24,100 to 24,250 are your key resistance zones. Value buying is seen in mid and small cap names. The Nifty IT is the top sectoral loser in trade, and the index is now down over 30% on a year-to-date basis. The Nifty IT's worst start to the year since 2003 is what we're seeing. For the Bank Nifty, profit booking for a second consecutive session continues to trade above its key moving average, and supports rest at 57,500 to 57,300. Resistance stands at 58,000 to 58,200. All right, let's go across to Sunny Agarwal joining us this afternoon for his view on the markets. He's, of course, head of fundamental equity research at SBI Cap Securities. Sunny, very good afternoon to you. Where is this nervousness in the markets coming from?
Yeah, good afternoon, and thanks for having me on the show. I think, again, maybe frequent flip-flop as far as US-Iran peace deal is concerned. It's something which may have some nervousness, and at the same time, today being an expiry day, that is leading to some kind of subdued trading activity as far as markets are concerned. But having said that, we believe that ultimately now Q1 earnings season is likely to start in the next 7 to 8 days. So market will start focusing on 1Q number, and we all know that 1Q numbers are likely to be muted because of inflationary pressure which most of the sectors have faced during the last 2-3 months because of an higher crude oil prices. So that's a known event, but however, since we know that 1Q is likely to be muted, followed by an slightly concern as far as monsoon is concerned, monsoon, how it is playing out. So in case July and August doesn't play out as per the expectation, that can have some impact on earnings even in Q2. But as of now, we are working with an estimate that 1Q will be slightly muted in terms of earning growth, and the remaining 3 quarters for FY27 will be slightly better. So on a full year basis, FY27, we believe that Nifty 50 companies can deliver kind of 12% kind of earning growth, and then followed by 14 to 15% earning growth in FY28. In a short term, what we believe is that the auto sales number will be pouring in tomorrow, and because of the low base, most of the auto companies across two-wheeler and passenger vehicle can deliver a healthy volume growth. And the one way to ride is obviously auto OEM, and another is auto ancillary, where we are seeing a gradual uptick as far as content per vehicle is concerned due to various tailwinds like premiumization, diversification, or inorganic growth.
Okay. Akshay P. Bhagwat also joining in. His senior VP JM Financials, and will give us a view of the technicals today. Akshay, what are you looking at as levels for the Nifty?
Good afternoon to all. So it's a choppy day in a very tight range for the Nifty index, but the crucial level to watch from here from a short-term perspective is the support of 23,800. That's an important support as we head for the new series, that's the July series tomorrow. And if the recovery ensures from the support, then once again we are looking at upsides of 24,250.
Okay. Akshay, good afternoon. Hiral on this side. So those are levels you're watching out for in terms of Bank Nifty. Nifty 50. What is the setup looking like in terms of Bank Nifty as well? Because you are talking about private banks probably who will try to catch up with the PSU bank performance as well in the last couple of months. So is the setup positive, number one, and then your topics?
Absolutely. The support for banking is better placed over the Nifty index. It's just that it's lost a bit of a momentum in the last 3 days, but I believe level-wise 57,500 is an important support, and I believe Bank Nifty should again recover as we start the new series, because the rollovers, as I see right now, for the July month are pretty strong, and 58,500 is the immediate top which Bank Nifty can retest in the shorter term time frame. As far as the call recommendation goes, the recommendation is a buy in Federal Bank, where the trend is pretty strong. It's a one-way trend. Current market price 329. We're looking forward for possible targets of 340 to 345 on the upside, with a stop loss below 322. That's trade number one. And the second trade which you can look at is Laurus Labs, where again the technical trend is pretty strong. It's a one-way trend, and at the rate of 1517 where it trades, you can buy for possible targets of 1560 to 1570 with a stop loss below 1450.
Okay. I want to quickly address what's happening with transformers and rectifiers. The company has over 1,000 crore order from Power Grid that has come in. That's why that big spike in the stock that you're seeing. Power Grid order for manufacturing transformers is the detail that we have on what has happened with the stock. Just transformer and rectifier is something that you're tracking, Sunny?
Yeah, definitely.
Yeah, so what is your view on it?
Yeah, so again, we continue to remain constructive on the entire transformer back, including trail. So, although I have to keep in mind that in short term, there can be some margin pressure, which we have seen even during Q4 number. Most of the transformer companies, because of exponential rise in copper prices, have witnessed some margin pressure, which may continue during the Q1 also. But having said that, the opportunity seems to be pretty large when it comes to our ancillary as a back. And even for coming to transformer, we have seen that during the last 2-3 years, there has been a significant turnaround in terms of performance. So revenue has doubled, profit has gone up by 4 to 5 times. So I think again 1,000 crore order. So seeing the sitting pretty well in terms of order book visibility. So we continue to remain constructive.
Sunny, thanks for that. This is an ultra mega order, and usually little over 1,000 crores is something which is called as an ultra mega order for a trill, and the execution timeline is over the next 30 months is what they're looking at. And if you have to talk about their order book as well, it stands at little over 5,000 odd crores already. So this is going to be an addition of another 1,000 odd crores that will be coming in, which had, 5,000 odd crores had a revenue visibility of around 2.5 years. So that's what you're watching out for in terms of it. Trill is concerned. Akshay, quick one in terms of Trill. With the spike that you're seeing, are you seeing further momentum?
Yeah, so with the momentum perspective, it's a good stock to buy from a momentum chasing perspective. The current rate is 350. BTST traders can look forward for this trade, where possibly 362, 367 can be the targets which might open up for tomorrow. 340 is the support.
Okay. Stay on with us, please, Sunny, and let's just, and Akshay as well. But let me just talk about one of the big stories of the day, which is a lot that is happening in the private bank space. So a couple of things that have happened with HDFC Bank. Rajiv Kumar has been appointed as part-time non-executive chairman. Beyond that, a new CFO has come in, who used to be the CFO of Axis Bank. The Bandhan Bank CFO is also just put in his papers and will be moving somewhere else. One is not quite sure where. In fact, let me get Sharad in to decode that musical chairs for us. Sharad.
Well, it was actually quite confusing in the last 6 hours of yesterday's exchange filings, but there's a musical chair at play for the CFOs, or in Hindi as we call it, Kissa Kursi Ka. Very interesting. We have Axis Bank CFO resigning, going to HDFC Bank. They are announcing. On the other hand, Bandhan Bank CFO has also resigned. A lot of changes at play. But yes, first of all, let's focus on HDFC Bank. This is pretty much important. And you see that Puneet Sharma has been appointed as the designated CFO from September 1st. And from 1st December, he'll be taking charge of this. Now, of course, this announcement comes in after the legal review has been done regarding Atanu Chakravarti. Also, Keki Mistry, who was already the part-time chairman, now in his place comes in the ex-finance secretary. We have Rajiv Kumar here. He's the interim part-time chairman, and interesting details about him as well. Here's the 1984 IAS batch officer, and also regarded in the role in the BFSI segment in 2017 to 2020, where there were issues in the banking sector. Also, he retired as the finance secretary as well. Also, for Axis Bank, Puneet Sharma, over here he has 26 years of experience coming in the leadership roles in Citibank, BCG and Tata Capital as well, and a lot to actually wonder, especially because earlier the expectations were for HDFC Bank that we would be having Bhavin Lakpatawala as the expected front runner, but now he has gone to RBL Bank. Of course, CFO Rajiv Mantri also resigned in Bandhan Bank to pursue another career opportunities, and Street might be factoring in that he might be going to another large listed bank, but more on that a bit later. Also, looking at how the shuffle is happening, it gets quite confusing, but over here we try to make it more simplified for you at NDTV Profit.
Okay, let me go across to Abhizar Divanji, founder of NeoStrat, who's joining us with more. Abhizar, the reason we wanted to talk to you about is, I mean, no one will really know or tell why a CFO left an X place and moved to a Y place. But from the perspective of how large private banks work, how crucial are some of these appointments? And in the context of HDFC Bank specifically, this shuffle at the top tech with the CFO and the chairman as new people coming in, how much of a bearing does it have on the functioning of a bank?
Okay. So first of all, I think none of these are sudden changes. The chairman was a temporary chairman and he was supposed to be replaced by somebody else. And the CFO was due to retire and hence was to be replaced by somebody else. So I don't think these are reshuffles as a reaction to anything. These are just that over time these have happened. Now, critical to HDFC Bank in particular is see what it's been through in the past. It's been through a governance crisis of sorts, where allegations were put in by a sitting chairperson who then resigned on the back of issues that he considered to be ethically different. Now, those issues have been thwarted, one, by a legal review. So clearly now the bank is out of this governance crisis type issue. However, there were some procedural lapses that had happened in the system, be it the 81 Dubai issue or maybe some technological issues on the ground here. There have been issues in the banking system rather. Let's not talk about HDFC. Kotak faced those issues in the past. IndusInd faced those issues. So ideally, in the run to innovation, in the run to growth, a lot of banks have not had their systems go with them. So now clearly one, from a chairman perspective, the good thing is that we have somebody who may be able to impact influences. So for example, if HDFC wants to put a point through or get with the government or get things done, I think a chairman of Mr. Rajiv Kumar's capability and reach would be fairly useful from a chairman's perspective to be able to guide it. Of course, I'm sure Mr. Rajiv Kumar, and has he been known in the system, will be slightly more moderated in terms of the actual divide between the role of a chairman and the role of the management. And I think that will be taken care of well. Now coming to the role of the management, if you're having a new CFO, clearly today's CFO in the banking system is somebody who is a back-ended CEO, I would call it. Somebody who is a good check to the existing CEO. So while the CEO is focused on growth, the CFO has to be focused on making sure that the accompanying systems and the processes and the accounting and the transparency levels are maintained. More importantly, the CFO is also now the face to investors. So ideally explaining the numbers and the actions that go behind it is what a CFO really does well. So I think investor or stakeholder communication and managing the back end in terms of making sure that the business is in check is really what a CFO's position is. And I think they've got capable people for that going forward.
Abhizar, just on one more question on HDFC Bank. The appointment of a former bureaucrat who's been the Chief Election Commissioner of India. Because remember, some of the names doing the round included a former deputy RBI governor, and KK Mistry had the interim part-time job till, and came in to help the bank at that time of flux. Do you think that some of the concerns that were being talked about when this whole saga began, Atanu and Shashidhar on two sides of it, may surface again? Because again, now you have a former bureaucrat who has come in.
So it's not about the bureaucrat, Tamanna. It's more about how does a chairman view the position now. So it's not. In fact, the bureaucrat is in a way beneficial because there needs to be a stakeholder representation that needs to be even more stronger, and the commitment shows out with the next bureaucrat coming in. But the important is that this particular individual, it's a very individual trait. It's nothing to do with being a bureaucrat or not being a bureaucrat. The individual trait has to be to exercise constraint, consensus building, and encouraging management to perform better, at the same time having a high level of healthy skepticism. So if that is the role of the chairman, is very well defined in the system, though nothing is well defined in governance, but the attitude of the individual will matter more than what the background is.
Okay, Abhisar, good afternoon, Hiral here. My question to you is, we're talking about HDFC, but what happens to the others? Do you think on the back of the reshuffle that's happened right now, there is talent scarcity in the system or in the sector as a whole, number one, and the domino effect of the attrition that will happen? Because if you talk about a Bandhan Bank as well, I mean, it's left with a vacant CFO, and this is at a critical time when there is a transitionary phase ongoing at Bandhan as well. What do you make of that aspect?
No, clearly, everybody has career aspirations and everybody needs to move to the next phase of their career. And I'm sure Mr. Mantri would have done the same. So clearly, is there a void for Bandhan Bank? Clearly, there's a void for Bandhan Bank. Is it something that Bandhan Bank needs to make sure it puts in place very quickly? It has to. Because at the phase that it is in, it's in a transformation phase. It's got a very good team otherwise. And I think it will be able to attract one of the better CFOs rather, who will be having the same attributes. So it's a question of how people want to move around in the system. And most people believe, in the banking system, if you look at it, look at what Bhavin has done. Bhavin has kind of left an HDFC Bank to join a RBL Bank, which is the new age promise. Because of the Emirates Bank investment, it is the next AAA bank which is moved out of being a mid-level bank into a larger level bank. So I think people have aspirations, and those entities need those kind of people. So ideally, it's not only the career advancement for the individual, but it's also the right place for the right CFO. So I'm sure Bandhan will get his. Maybe Mr. Mantri was up for better things, and hence he may have left Bandhan Bank. But yeah, I mean, this is an evolution that happens everywhere and has happened here in banking.
Just a follow-up to that. Do you think for, mid-sized private lenders to then retain the top-tier finance talent will be difficult when you have mega names like a HDFC, Axis who come in? And in that kind of a scenario, when analysts are talking about mid-sized banks where they're seeing growth coming in, if there is that little shake-up happening, what happens?
So let me remind you that when these mid-tier banks were set up, there was a rush of talent to them because there was an expectation that this is where they will be able to create real value and real organizations. Now, as those organizations have matured, people have reached different levels. And RBL would not have attracted somebody unless they got an NBD which says, oh, now I've got $3 billion of capital. And I can do a lot more with that kind of capital, and the right CFO will help me drive the way through and transform the bank. So people look for challenges. And the challenges will exist in mid-tier and large tier. I don't think there is any doubt about that. It's the question of the promise that the bank shows for the incumbent. Now it's for the incumbent. It's not that the bank does not have promise. It's for the incumbent. So there'll be somebody else who said, I've spent enough years in X organization, a mid-tier bank. Now let me move to a more mature bank. And somebody else would say, let me take up the challenge at a mid-tier bank and grow it to a large bank. So I think it's individual career preferences which normally drives where people need to be. The other thing, of course, is what are your skill sets? So the kind of effort and the kind of investor focus, externalism required in a mid-tier bank is far larger than that required in a larger bank. Because in a larger bank, frankly, unless you have a crisis management to do like HDFC may have going forward, there is not much to do. There's a way to keep the ship controlled. But some people may like the challenge and others may be more fitted for running organizations which have matured and grow well.
Okay.
Okay, thank you so much, Abhisar, for joining in. I mean, I think there is so much more to talk about in terms of how, as one segment, banks get a lot of focus on who's running them versus a lot of other companies. And definitely banks too, because the stakes are that high. But we'd love to catch up again for a deeper conversation. Abhisar Divanji there. Let me go across to Samit Sarkar, that time of the afternoon where we get you all the chatter from dealing rooms. Samit, what's on your plate this afternoon?
Well, firstly, it's Apollo Microsystem and Premier Explosive. Now, the buzz on the street is that Apollo Microsystem will look to acquire Premier Explosive. And for this acquisition, Apollo Micro might also do a fundraise, is what dealers are acquisition. The fundraise will primarily be to fund this acquisition of Premier Explosive. When it comes to Genus Power, there was a big block deal that took place in trade today. GIC was a likely seller here, but what dealers are also indicating that there are smart HNIs have started to accumulate this counter at lower levels. So keep an eye out for Genus Power. They're expecting the stock to bounce in trade tomorrow. For Kotak Mahindra Bank and Axis Bank, there are buy flows on the PMS desk. Dealers are expecting the Q1 updates to be quite strong for both the names. So keep an eye out for both the banking names as well. And lastly, when it comes to Just Engineering, there's a block deal of around 12 lakh shares that took place in trade today. Dealers are indicating that a prominent large HNI was one of the buyers in this block deal. The stock was down over 3% in trade, but has recovered very swiftly. It would be interesting to see the names that come out in bulk and block deal data post-market today.
Okay, thank you for that, Samit, in terms of interesting names that we're looking at. Akshay, let me come to you. From the names that actually Samit has mentioned as well, there are some of the movers that you're looking at. Apollo Micro, Premier Explosives. In fact, the defense sector as a whole has been one of the top gainers today. Anything that you like on the charts?
Yeah, so Apollo Micro looks promising. Now, the stock has been in a range since the month of June. The range is pretty evident, 380 support and 440 resistance. And what I see on the charts is possible accumulation in this range. It is setting up for a breakout above 440, post which you can look forward for potential targets of 475 to 490.
Okay, so that's with regards to where Apollo Micro system goes. Thank you for that. Stay with us. In fact, another company which is buzzing in trade, Magellanic Cloud. Let's pull up that one on the screens. Now, that stock is up 6.5%, did touch an intraday high of around close to 10% kind of gains. And e-surveillance, that has emerged as the key growth driver for this company, as one of their subsidiary has secured a letter of intent from Manappuram Finance across 1,000+ branches. We have Joseph Sudhir Reddy, Global CEO and Chairman and MD at Magellanic Cloud, joining in. Mr. Reddy, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question coming to you is, if you could help us understand, what does this LOI actually translate into that you've got from Manappuram Finance, which will be applicable to 1,000+ branches?
Thank you for having me here. Joseph Sudhir Reddy, Magellanic Cloud, group company that has multiple subsidiaries, which one of the major area of segment is the e-surveillance. This LOI from Manappuram is one of its e-surveillance that we do have the intent of doing the entire monitoring of their branches and watching out their vaults and giving the access to their vaults. That is the kind of high-level picture of it, but we do utilize AI with models and give a predominant view of what is happening in their gold branches and how do we secure them, how do we protect them, and it automatically alerts the command center where our people will be watching out, vigilant if there is incident. Most of the AI technologies that we utilize. If you want me to expand or elaborate more, I would love it.
So, Reddy, just trying to understand, how are you differentiated from any other surveillance systems that are available? What would you be doing in these 1,000 branches of Manappuram, for example? that the regular surveillance systems cannot do? Just trying to understand the differentiation you bring to the table.
Absolutely. I think, yeah, that's the great question. So traditional surveillances are direct CCTV cameras that were installed, and there will be some people watching out at the command center, live, eyeball monitoring, those kinds of things. Everybody is moving to a proactive intelligence that has been put in place. We have been serving in this e-surveillance specific area and providing to a lot of banks, branches, over 25 to 30,000 branches or banks or ATMs could be other things. Gold is a special case that where we have put in our effort to create these models, AI models that will be sitting on the edge, and that gives the alerts mechanisms when you have some incident or observation that is suspicious or a deviation without regular SOPs. A standard operating procedure has been defined saying that this has to be done this way. A traditional will be looking after manually and or minimum automation kind of a process. But here we are utilizing AI models to be able to identify where you are deviating from a regular standard operating procedures. I cannot elaborate more as it gives to you the insights of the business and whatnot. But with the traditional, it's manual or semi-automated, which is having a particular rules that you write. But here, we are utilizing the AI and giving you and learning what could happen and what not. That is the differentiator.
Sure. You know, we would love to talk more about this order as well, and we will connect back with you as well. But thank you so much for joining in on this edition of India Market Close. We'll quickly have to slip into a short break. We have lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of the jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com. is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means. Welcome back. You're watching India Market Close. Nagaraj Shetty joining in now to talk about the technicals that we're seeing in the markets. Nagaraj, very good afternoon to you. Let's just talk about why the Nifty has been flailing in that very narrow range. Do you see any possibility of improvement?
I think the short-term trend remains range-bound for the market. The near-term trend remains up. We have seen some tremendous up move from the lower levels. That market found the resistance somewhere around 24,200 levels. I'm expecting this consolidation movement is likely to continue at least 1 or 2 sessions before showing a breakout of 24,200 again from the lower levels. So remains choppy for the market, and 23,800 is going to be a good support for the market in the near term.
And what about stocks on your radar?
I have 2 stocks from alongside. First one is from a pharma front, Gland Pharma. Chartically, this Gland Pharma has witnessed a sharp breakout recently, continuously moving up over the last 3-4 sessions. Overall chart pattern is looking positive, currently trading around 2515, 2516 levels. So I'm expecting this to move up further, and immediate upside target would be around 2650. One can place a stop loss at 2425. Second one is ITC Hotels. After a small downward correction, the stock price has bounced back very well from the lower levels, indicating a positive chart pattern. Currently placed at the edge of moving above 200-day EMA, the chart pattern is looking positive with rise in volume and positive RSI pattern. I'm expecting more upside from here onwards. Currently trading around 179.75, 179.80. One can look to buy at CMP. Immediate target would be around 190. One can place a stop loss at 175.
Okay, so ITC Hotels and Gland Pharma is what you're watching out for, Nagaraj. Nagaraj, the other sector I want to pick up with you is what's happening with real estate and defense. Both these counters, the momentum is absolutely strong in terms of today's session. Anything that you like over there which could be good momentum plays?
The real estate has witnessed a good build-up recently and moved up very well. Over Realty is the one, the stock price is continuously moving up, placed at the edge of breakout. On the defense front, BDL is the one, after a small downward correction, bounced back very well. And even Mazgaon Dock also placed at the consolidation, placed very well above the support. So these are the two stocks which are strong in the discussed sectors.
Okay, so, in fact, all of these counters are seeing some bit of profit booking from the day's highest levels, if you see in terms of Nifty India Defense as well as the real estate pack as we speak. In fact, another stock that we should be watching out for, Eicher Motors, and that is our stock of the day. And this is after the Delhi government has actually cleared the EV policy. Puneet joins us to tell us why is it negative for Eicher Motors as well. Puneet, 4.5-5% downtick on Eicher Motors. Seems the Delhi EV policy is not really working for them. And if other states follow, I don't know what's going to happen.
Well, most certainly, and it's something that the company will have to look at in terms of increasing the product suite. But largely, as you rightly mentioned, that continues to be the biggest impact, the biggest loser for the Nifty 50 today as well. From 2028, only the electric two-wheelers will be registered from April 2028 in Delhi. Now, very importantly, such policies could actually become a template for the other states and hence could be a very key monitorable to watch as well. When you look at Eicher Motors, the total combined sale is roughly around 3.3% at this point of time, and this is only for the Royal Enfield brand. It's also important that the company does not have a product which is at full scale right now, and we'll get to that in just a bit. But compared to the others as well, TVS as well as Hero both have electric scooters as well, along with other bike options that they will look at in the future. So hence the most impacted at this point of time because of this policy as well. When you also look at what brokerages have also flagged off as concerns, specifically, for Morgan Stanley, they have mentioned that they are seeing less of an EPS impact, but this could weigh on the multiples and essentially on valuations, something that we're already seeing today. They've also said that Eicher in particular now needs a successful electric vehicle option. If that would be under Flying Flea or any other sub-brand, will be something to watch. Kotak Securities has also said that all motorcycle heavy OEMs, in which Eicher does count itself in, are at a big disadvantage at this point of time because of this policy. Now, what do you have to watch out for if you're a shareholder already, or if you have to watch as someone who's looking at it prospectively also, is because they launched the brand Flying Flea in April of 2026 and the first model is out, but the rollout continues to be very slow at this point of time, and hence the mainstream motorcycle brand, of course, in the EV space, but the rollout has been much slower, only in a couple of states as of now. And in terms of the other competitors, Ultraviolet, Revolt, as well as Ola Electric are all present. Ather expected in the next year as well. You could expect some strong pushback from OEMs as well as on auto ancillaries and dealers. Watch out for that impact. And finally, on valuations, has come down materially from that 5-year average of 34 times price to earning. Currently trades at around 27 times, but compared to the other OEM players also is slightly more expensive. So if you can pull up the plate, if not, 31 times is what TVS Motor trades at. Eicher is at 27, but Bajaj and Hero are at 15 to 20 times price to earning multiple.
Okay. Just want to get a quick view from Nagaraj on Eicher. Eicher, let me get, and Maruti as well. Both stocks in focus and seen as diametrically opposite in terms of the impact they have of the Delhi EV policy.
Yes, rightly said. Eicher Motor broken down after moving into a consolidation and placed at the 200-day EMA support, but looks like we could see some more weakness in the short term. At the lower level, 6,800 is going to be a support for the stock price to at least show some bounce from the lows. And other side, Maruti is looking very positive after moving into a consolidation band. It has bounced back very well in today's session after the news and surpassed the 200-day EMA, which was a hurdle over the last couple of months. The chart pattern of Maruti is looking positive. I'm expecting more upside towards the next overhead resistance of around 14,800 to 15,000 levels.
Okay, let's also talk about Goldman Sachs. Goldman Sachs has an interesting take on Page Industries. They have hiked their target price to 48,000 from 45,000 and maintained a buy. The price hike is taken in May, and volume growth momentum to sustain is what they're saying. Volume growth recovery is led by structural factors. Signs of improvement in the EBO experience bode well for the long term, and the online channel continues to see good growth. That's one of the points that we have on the show. Nagaraj, just a quick view on Page Industries.
The industry has been moving up continuously without showing any reasonable downward correction in between. The strong upside momentum, the chartically very bullish setup, I'm expecting more upside from here onwards. Though it has placed at the higher levels, still there is no indication of any significant reversal building at the higher levels. So 44,000 is going to be the next resistance to be watched in the near term.
Okay, so that's with regards to Page Industries as we speak. But moving on, Tamanna, Dixon has been in focus, I think, since the time Shrimi actually broke the story with regards to the JV with Vivo, that it's being fast-tracked. And now there is a further update that's coming in there, on the back of which you did see the stock spike once again in today's session. The Dixon-Vivo deal is gathering pace, and as sources indicate that the JV is now in the final stages. Rishabh is here to tell us more. Rishabh, the stock did see a good spike, has cooled off, but still trading in the positive. What are you picking up?
Absolutely. What we're picking up is the fact that the government is inching closer to approving the Vivo-Dixon JV that has been in the works for quite a while. There have been a lot of aberrations and delays. The company's management has also been very cognizant of that. A lot of issues with Vivo being under the scanner for a bunch of reasons. Of course, it is a Chinese company, so there are concerns that the government has on that front as well. But what we're picking up is that this JV is moving closer and closer to the final approval letter being received by Dixon. Just a couple of weeks back, we reported that the interministerial panel that the government had appointed had already cleared this approval. So this is making progress as we speak. What we're picking up is, of course, the fact that this deal will be extremely value accretive to Dixon Technologies. They will be making, if this deal goes through, up to 22 million units for Vivo smartphones on an annual basis. So that is going to be a big contract and a big deal that this company signs. The company has been doing well basis this news as well. So what we're picking up is the fact that this deal is moving closer to fruition, and we will keep reporting on this like we have over the past few months or so.
For that, Rishabh, but the fact is that this story has been in the ether for so long as far as Dixon is concerned. I think the street will now maybe react when it finally happens. Let's talk about our bull versus bear candidate for the day. It's a mixed outlook emerging for Bharat Dynamics. Strong order wins at one end, and a robust order book is supporting long-term growth. But near-term margins, execution and supply chain risks remain key monitorables. Varsha joining in to give us both versions of how we should look at the company.
First of all, the 1,350 odd crore order from HAL improves visibility for this company. That's the bull case that I'm going to start off with. A good order win from HAL. But recently, Goldman Sachs has maintained sell 8% downside from current market price. This is one of the bear thing that this company has. But moving on, the 1,110 crore Helena order came earlier than expected. This was expected, but this came much earlier, so kudos to company for that. But the revenue from these orders will only come from FY28, and the point here is the FY27 we might see some kind of pressure there. Moving on. New missile programs and UAV systems will add opportunity for the company, so that is the next growth trigger that the company has. But the margin will be at risk and higher due to the use of higher external components. So one must keep a watch on margins for this company. Talking about large order book of around 26,000 crores gives strong visibility for the company, but Q4 performance was weak. Even there was a margin impact in Q4. Also, company did miss its guidance as well. But they are expecting a strong comeback when it comes to margin, which is expected to improve with better execution going ahead. But FY26 overall performance was actually weak. And why I'm talking about this, because we need to keep a watch on FY27 whether company will maintain that guidance or how FY27 will be overall for the company. Moving on, so overall, if you see, there are good growth prospects when it comes to BDL, considering the order book that they have. But margin improvement and FY27 growth is one key factor that you should watch out when it comes to this counter.
Okay, thank you for that, Varsha. We'll take a very short break at this point. Let's do a quick market check before we get into that break. Bharat Dynamics is fine. We've seen the broader markets improve, but just let's take a look at the Nifty before we get into that break. If we can just pull up the Nifty very quickly, languishing, right? Below that trend line, 0.34% up, nothing much happening there. We're coming right back with all of the latest, plus your BTST ideas. Don't go away.
Co-powered by CoinSwitch.
Economy, business, world.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names.
Welcome back to India Market Close on NDTV Profit. Now, clearly, as Tamanna was just mentioning, if you pull up Nifty 50 and Bank Nifty, absolutely languishing in the last 15 to 20 minutes of trade. We're nearly at the day's lowest levels. I mean, no major direction is what you're seeing. In fact, let's also get in Ashish Chaturmurthy, Managing Director and Fund Manager at Apex PMS JM Financial. Ashish, good afternoon and welcome to the show. We know it is expiry, but clearly with the way markets have been moving right now, what is your view in terms of a direction? Do you think this could still be a good opportunity to look at some strong names, and if so, which would they be?
Hi, good afternoon. So yes, I think it's broader markets are into a consolidation phase, and obviously, if one look at Nifty 50, then obviously certain sectors like IT, FMCG, they have been underperforming the broader market, and also within the large cap private banks, which has got a very, very significant weight at an index level. So if you look at HDFC Bank has not delivered any return. So obviously because of these factors, index is looking very, very tight within a range of 23,500 on downside to 24,200 on upside. But if you look at the real strength which is coming into mid and small cap, where I think very, very strong earning visibility is being seen across mid cap, where we have seen almost 26% kind of earning growth, and small cap almost 18% earning growth. So clearly the traction is getting built into mid and small cap indices, and particularly into themes like data center, energy, defense, and CDMO to a great extent looks very, very promising within the broader market per se.
Okay. Stay on with us, Ashish. Just going across to Parth. Parth is joining now to tell us what are the top volume buzzers in afternoon's trade. Parth.
Yeah, sure. So there are three stocks that are buzzing on the back of really good volumes. The first one is Gufic Biosciences, which earlier today saw an up move of 15%. In the last 2 days, the stock has seen an up move of 20%, touching the highest levels the stock has seen since January 2025. Volumes today are the highest ever the stock has seen since May 2017, and 14 times its 20-day average volumes. Next in line, we have Genus Power Infrastructure, which is on a 3-day losing streak and has lost almost 20% in the last 3 days. Today, the stock has seen the highest ever volume since it got listed in 2005, and they are 13 times its 20-day average as well. Lastly, we have Saxoft, which is on a 3-day gaining streak and has gained over 50% in just the last 3 trading sessions, hitting a new 7-month high as well. On the volume side as well, volumes today are 10 times its 20-day average and the highest ever since the stock's listing in 2005. So these are the three stocks that you should keep on track on the volume side.
Seeing volumes picking up as well. Saxoft is up 12 to 11, 13% as we speak. Nagraj, anything on the charts that you like on these names?
It is the one that has broken above the hurdle and erased some of the gains today from the higher levels from 442 levels. I think looking very positive at this point of time, and even RSI pattern is also looking good. So 440, 450 is going to be the next resistance to be, 445 to 450 is going to be the next resistance to be watched for the stock price in the near term.
Okay. All right. Let's, just get some very quick BTST ideas from you also, Nagraj. Anything that you're liking from the auto sector which you think can continue momentum?
Maruti is looking positive. It has broken above the consolidation band and looking positive, moved above 200-day EMA. I think placed at the higher levels, slowly, gradually, higher tops and higher bottom is indicating gradual momentum on the upper side. I think looking positive for the short term. 14,500 is going to be the next hurdles to be watched in the short term.
Okay. So that's Maruti. In fact, Genus Power also is something that was mentioned by Parth. Now, MK also has come out with a note and they have a buy for a target price of 550. This is mainly on the back of the smart gas meters, where the opportunity is ripe and expecting orders in FY27 as a whole. Nagraj, on the charts, now you're seeing a Genus Power which is down 6.5% as we speak. But you have a lot of brokerages which have a tall target price on this one. Do the charts match that?
Last 2-3 sessions decline has damaged the chart pattern, obviously, from 350 to almost 275, 280. So looks like very negative at this point of time. And though there is a possibility of minor bounce after having declined from 350 to around 285, 290 levels, there is a scope for some bounce. I think I'm not expecting a bigger upside from here onwards. The bounce could reach up to around 315, 320 levels in the near term.
Okay. Now, amidst a pause in the Iran war and the reopening of the Strait of Hormuz, falling crude and higher fuel margins could help OMCs recover losses in about 7 months, provided current market conditions persist. Somit joining in with details of how we make that race to 7 months. Somit.
Well, if you look at the crude oil prices, they are now averaging around the $72, $73 per barrel mark. Now, this is because the settlement of US and Iran and normal crude oil flowing through the Strait of Hormuz, that is close to 20 million barrels per day. Along with this, it's a combination of lower excise duty and higher retail fuel prices. So, three things that is helping oil marketing companies to aid higher gross marketing margin at this point is lower crude oil prices, low excise duty and higher retail fuel prices. Now, if you assume that the landed cost of crude in India is around $77 per barrel, that is $5 per barrel higher, assuming that is the transportation cost, the blended fuel gross marketing margin earned by oil marketing companies is 23.1 rupees per litre. This is what they are earning on selling every litre of petrol and diesel, as against the historical average of 12.4 rupees per litre. So, clear gap, or clearly they are earning 10 rupees more right now on every litre of petrol and diesel. Now, if you use this against the consumption that we are seeing, now on a daily basis around 463 million litres of fuel is consumed, of which 90% is the market share for the oil marketing companies. So, they are selling close to 417 million litres per day. And the losses that oil marketing companies had seen earlier because of higher crude oil prices was close to 90,000 crore rupees. And this is for the month of March, April, May and part of June. Now, this 10.7 rupees per litre that they are earning higher compared to the historical average, multiply that with the fuel that they are selling on an everyday basis, they can recoup nearly 446 crore rupees of loss on a per day basis that they were doing earlier. And this, if you multiply with if you compare with the 90,000 crore loss, it can take nearly 7 months for the oil marketing companies to recoup the losses. But there are a few assumptions to this, and those assumptions are also a big risk to this calculation. Firstly, if crude oil prices move higher, then the time taken could be longer. If rupee depreciates further, again the time taken could be longer for the oil marketing companies. And the two of the biggest risks which could happen is what the street is anticipating, and hence we are not seeing a big move when it comes to oil marketing companies. Firstly, government could roll back the excise duty cut. They had reduced the excise duty by 10 rupees per litre. So, street is expecting government to roll back that. And also, oil marketing companies had increased fuel prices by around 7.5 rupees per litre. So, that could also be reduced going forward to keep inflation on check, is something that the street is expecting. And because of these two reasons, oil marketing companies are not performing at this point of time. But given the scenario, it will take nearly 7 months for the oil marketing companies to recoup the entire loss that they had seen in just 3.5 months.
One can assume things will only get better from here, because we've just seen the start of flow of crude prices. Ashish Chaturmota, oil marketing companies is something that you're looking at as a potential gainer. We have a 6 to 7 month timeline that we've talked about today.
So, Tamanna, generally we have avoided this space of oil and gas space, whether it's on the oil marketing company side or even the explorers for that matter, because maybe from a valuation perspective, they might look very promising at 1.1 time price to book and with a very strong dividend yield. And I think now obviously crude prices coming down, rupee also stabilizing, there could be chances of good recovery. So maybe some short-term pullback could not be ruled out in these names, but as a matter of fact, from a medium to long-term investing perspective, we have avoided these names because of the kind of volatility this space has reflected over a 5 year or a 3 year long period journey. So clearly from a short-term perspective, yes, some pullback of 10, 12, 15% could not be ruled out, but as an investor, we have been avoiding this space.
What are the spaces where you're finding potential though? When you say you're avoiding OMCs, what are you liking?
So definitely, I think as we mentioned, CDMO is one space which looks very promising to us, because if you look at CDMO as an opportunity, it's very structural. The way innovators are doing tie-up with a lot of Indian players, and the way the molecule development has been taking place, many companies in this space have seen a growth of almost 30 to 60% on a Y basis, clearly indicating that there's a very, very strong growth trajectory which is being witnessed. And within this space, we have been positive on stocks like Laurus Lab, Divi's Lab, Naveen Fluorine, or even for that matter, SciLife, which has been working on many molecules. So I think this is more structural trend which is getting reflected into this space. If you look at the entire energy space, we believe that the entire HVDC space or transformers, and so if you look at the overall T&D space, the capex is going to be almost 9 trillion rupees, and I think that's where a lot of a lot of order book is getting built. And we believe Siemens Energy is one stock which is one of the cheapest within this space. So our sense is stocks like Siemens Energy, CG Power, Thermex could be a very big beneficiary of this entire energy transition, plus the entire data center story which is going to play out.
Okay, so those are few of the power names that you're talking about as well. Any view that you have, Ashish, with regards to real estate? Because that sector has been gaining traction, but the concern over here is initially the ask was that probably your new launches is something that probably will get delayed. Then the question came in that is it going to be execution, because launches are happening, especially with your large builders. So how would you advise investors to look at real estate as a space?
So, Hiral, we have always believed that rather than playing direct real estate, one should play the proxy. And proxy, ideally, the good way to play could be wires and cables as a segment, because that's not just the proxy for real estate, but also the entire capex, manufacturing, data center. I think it can't happen without wires and cables. So we believe that the best way to ride the real estate story should be through these proxies, and ideally wires and cables, because if you look at the leaders like Polycab and KEI, the earning guidance is going to be 20%. If you look at some of the mid cap companies, like for example, RR Kabel is going to grow at 30%, or even a smaller players like VMark, which is more into SME or a small or micro cap segment. These companies are going to grow at 35 to 40%. So clearly the growth trajectory is very, very strong. They have maintained their margin profile even in an environment when copper prices were extremely volatile. So clearly indicates that the earning visibility could be seen from a medium to long term perspective, and with almost 20% kind of top line growth, we believe this is a space which is going to compound very well.
Okay. Thank you so much, Ashish and Nagaraj, for joining in. And we are in the end of the 30th of June, Hiral. The halfway mark for this calendar year has already happened. I don't know about you, but I feel like this year has just zoomed past.
Absolutely, zoomed past, and there has been so much that has happened on the geopolitical front, the impact it has had on markets as well, the commodity cycles as well, because you've seen that upcycle, and now in the last couple of days, that slump that has come in. So lots that has happened, and I think the best way to look at it is how markets have fared. Just look at the returns and that'll tell you the story.
Nifty is about 8% down. Mid-cap 150, this is since 1st Jan, so we're looking at a 6-month return. The mid-cap index is flat, the small cap is also flat, and that's actually not too bad. Let's look at a 6-month return in terms of the indices which have done well. Nothing, barely any returns coming in across the board. India Defence, Metal, Pharma, PSU banks, all of them are barely showing any returns. Let's look at, on the other side, what's happened with Bank Nifty. 3% down. Financial services 3% down. Nifty Realty being one of the worst performers, 4.5% down. The Nifty Auto is about 5% down. But there are worse ones out there. Hold your breath. Okay, the oil and gas 7% down, FMCG 11.5% down, and wait for it, the Nifty IT in 6 months has given you a negative 31% return. What are the stocks that have been top performers in the last 6 months? On the positive side, in terms of a 6-month return of individual stock, you've got Adani Enterprises, Apollo Hospitals, Adani Ports, and SEZ. But that's pretty much it. I don't know if we have the top losers in the last 6 months. That would be also interesting to see. But it's been quite an tumultuous year so far. You've had, Hiral, a trade war, an actual war, the blocking of the Strait of Hormuz, a massive IPO with the size of SpaceX, and this whole AI transformation which has taken place.
Absolutely. You know, lots happening. That's exactly what we're talking about as well. But the question over here is, Tamanna, all the sectors which have underperformed, will they see a ray of hope in the second half of 2026? And that's what everyone is going to watch out for. But clearly, right now, if you see in terms of closure as well, the advanced decline ratio is what I want to pick up first, because clearly your declines have increased, the gap has narrowed, and that's telling you what's happened with the markets. Pull up Nifty 50 on the screens, because from the kind of surge that we saw when we started off India market close, that has been given up. And again, Tamanna, look at the rise. So this is clearly telling you this is a pure expiry play. I mean, there is no major movement. You're at that 23,920 mark. So 23,900 is protected, which is slightly positive right now.
Yeah, barely 100 and 150 point range like we saw in Monday's trade as well. Pull up the Nifty contributors and then we'll get to the heat map very quickly and tell you what's been happening there as we close off for trade. Infosys, TCS, some of the biggest losers dragging down the markets today. Maruti, Bajaj Finance and Titan have been contributing on the Nifty, but that's not quite the heat map. Come back with a heat map. Let's just see what the heat map is showing you today. And Maruti really 5.5%. The EV policy, everything they're doing to clean up Delhi is helping. Titan's doing well today, so is Adani Enterprises and Bajaj Finance, Eternal as well. But Eicher Motors, I mean, the lack of an EV play is really hurting
them. And I think, you know, if other states follow, the pressure is going to be more in terms of Eicher going ahead. You know, the consumption play also comes to my focus, Tamanna, because look at ITC, look at Tata Consumers and look at HUL. I think the rainfall issues, the El Nino impact is what you're looking at. Your Kharif sowing is 22% below normal right now.
Yeah.
So if that is not, we are not able to catch up on that in the next 2 to 3 weeks, your FMCG companies will see a hit.
There was an IMD alert just before we've closed up saying that there's a red alert in some parts of Maharashtra as well. So you're going to have a very extreme kind of weather event there. We'll just look at the top gainers and losers in the broader markets before we wrap out of India market close and look at the picture over there. Quest Corp, about 7.5% up. Balaji Amines, Cochin Shipyard, Balrampur Chini, some of the winners today, but not too much action. On the losing side, KPI Tech, ZF Commercial, Eicher Motors are some of the ones which are hurting. So
again, majorly IT.
Auto and it's mostly an IT down day kind of a story. But that's all the time we have on India Market Close. From Hiral, me and the team that put the show together, thank you so much for watching. Stay tuned. All the action continues on the other side.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's
Hello and welcome to NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin near the $60,000 mark. The levels are coming on back of technical bounce. Germany leads Mika crypto authorization on deadline. Dubai's Vara license says 50th crypto firm. Strategies Michael Saylor hints at another Bitcoin buy. Well, that's all about the headlines. Let us talk about some crypto basics here. Remember, tokenization is the process of converting ownership of a real-world asset into digital tokens on a blockchain. Now, think of it like dividing a property or a bond or even a piece of art into thousands of digital units that people can buy, sell or trade. Remember, each token represents a share or a claim on the underlying asset. A simple analogy is a pizza. Instead of one person buying the entire pizza, you cut it into multiple slices so many people can own a piece of it. Now the tokenization does the same thing but with assets. Rather than requiring someone to buy an entire building worth 100 crore rupees, tokenization allows investor to own a small fraction for a much lower investment. Now the biggest advantage is accessibility. It lowers the entry barrier, improves the liquidity by making traditionally illiquid assets easier to trade and enabling faster, more transparent transactions through blockchain technology. Globally, we are already seeing interest in tokenizing assets such as government bonds, real estate, private credit, investment funds, and even commodities. Financial institutions view tokenization as a way to modernize capital markets by making ownership more efficient and settlements much faster. That said, tokenization doesn't automatically make an asset safer or more valuable. The value still depends on the underlying asset and the strong regulation, investor protection, and of course a clear legal rights which remains essential. So tokenization is best understood as a new digital infra for representing ownership, not a new asset class, but in itself as well. Well, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
and welcome back to NDTV Profit. You're watching Market Express. My name is Puneet Zaveri. Let's get straight into the show. Markets stay choppy in trade. Nifty ends near the day's low, below the 23,900 mark. The Sensex is also down by over 250 points, while Maruti Suzuki and Titan top the gainers in terms of the Nifty 50. Eicher Motors continue to be down and out in today's trade, led by the Delhi EV policy. Tata Consumers also lags behind, while the broader markets outperform the benchmarks. IT, banks, metal and FMCG were the top sectoral drags for the day, with the tech index falling by over 2.5%, while defense, realty and pharma were among the top gaining sectors. Shilpa Medicare jumped by over 5% today after the company's wholly owned subsidiary Shilpa Biologicals entered into a co-development and supply agreement with the Finland-based Orion Corporation. Now the agreement has been inked for the company and co-development essentially and supply of intravenous nivolumab biosimilar, referencing one of the world's most widely used cancer immunotherapies. Goldman Sachs stays bullish on Page Industries, raising the target to 48,000 rupees per share from, and says essentially that the price hikes, improving volumes as well as stronger EBO experience, which is exclusive brand outlet experience, as well as the online growth is underpinning the long-term demand visibility of the counter. Stock was up almost 2.5% today. Zaggle Prepaid is in focus after entering a 5-year agreement with APSE Financial Services to provide its Zoyas platform and expense management solutions. Now, it is strengthening its SaaS offerings going forward as well. Shares of transformers and rectifiers surged by over 6% after the company secured over 1,000 crore power grid order, boosting investor sentiment as well as strengthening its order book visibility. Stock continued to be up and all about today. Eicher Motors was the top loser for the Nifty 50 and slipped after the Delhi government cleared the EV policy for the state, encouraging more electric vehicles. Now, this move draws a hard line under the capital petrol and CNG two-wheeler trade and leaves Eicher Motors' Royal Enfield brand exposed at this point of time. They just carry one electric model that is under the Flying Flea brand. And that's despite Royal Enfield's commanding market position. Delhi contributes to about 3.3% share of the overall sales for Eicher Motors, and hence, with no EV alternative, this will be something to watch. It comes in on April 1st, 2028. Now, the government is in final stages of issuing an approval letter for Dixon Vivo joint venture. Now, sources say that the venture nears the final node after the interministerial panel clearance earlier this month, marking a key regulatory significant progress on a joint venture that's been stuck for 19 months now. OYO is checking back into Dalal Street. Now, the parent firm Prism has filed for a 6,650 crore rupee IPO. All fresh money, no exit from the existing investors. Big names like SoftBank and Ritesh Agarwal himself are staying put, signaling confidence at this point of time. Now, the focus is clear. Clean up the balance sheet and back growth even as profitability improves and key overhangs fade away. Gold prices are on track for their biggest quarterly decline in more than a decade. Now, the precious metal is heading for its sharpest fall since 2013 as a hawkish US Fed Reserve continues to weigh in on investor sentiment. Now, expectations of a higher interest rate for longer have strengthened the dollar and reduced the appeal of non-yielding assets like gold. WhatsApp is working on a new feature that could make chatting more private. Now, the platform is expected to let users connect using unique usernames instead of sharing their phone numbers. Now, that means that people will be able to start conversations without revealing their personal contact details. Now, the feature is aimed at improving privacy, especially when messaging someone for the first time or joining group conversations. A major leak has put Apple's next generation iPhone in the spotlight. Details, images, and supplier information linked to the upcoming iPhone 18 Pro have reportedly surfaced online following a breach involving a Tata Electronics facility. Now, as per reports, the leak includes photographs of components and reveals parts of Apple's global supply chain. While Apple has not commented on the report, the incident raises fresh concerns over supply chain and security, as well as product secrecy ahead of the future iPhone launches. Prime Minister Narendra Modi is likely to travel to the United States and Canada in December for a series of high-level engagements. Now, the visit is expected to include the G20 summit as well, as talks on strengthening economic ties continue. Now, a key focus could be progress on the proposed comprehensive economic partnership agreement with Canada as well. At least 30 people were injured after a fire broke out at a naphtha pipeline inside the Haldia Petrochemicals plant in West Bengal. Now, the blaze triggered a major emergency response, with fire tenders rushed to the site to bring the situation under control. The injured have been shifted to a nearby hospitals for treatment, while the cause of the fire is yet to be confirmed. The Kerala High Court has ordered a swift investigation into the alleged irregularities in the Sabarimala gold plating case. Now, the court directed the special investigation team to carry out a thorough probe, stressing that no aspect of the case should remain unexplored. Now, the High Court has also called for a time-bound investigation to ensure accountability. The case relates to allegations surrounding the use of gold for works at the Sabarimala temple. An India-US trade deal could be just around the corner. The US ambassador to India, Sergio Gore, has said that the negotiations are now in final stages, with only the last 1 or 2% of the discussions left. Now, the remarks signal that both sides are close to resolving the remaining issues. Once finalized, the agreement is expected to boost trade, strengthen economic ties, and open up new opportunities for businesses in both countries. Iran has dismissed US President Donald Trump's claim that talks are underway between Washington and Tehran. Now, Iranian officials say no direct negotiations are taking place with the United States. However, Tehran has confirmed that an expert delegation will travel to Qatar later this week for separate discussions. Now, the death toll for the devastating earthquake in Venezuela has continued to rise. Now, authorities have actually said that at least 1,700 odd people have now lost their lives, with rescue teams still searching through the rubble for survivors. Now, thousands have been injured and many more have been displaced as entire neighborhoods were flattened by the powerful earthquake. Now, emergency services remain on the ground, while aid agencies are stepping up relief efforts for those affected. Morocco has pulled off one of the biggest upsets of the FIFA World Cup, knocking out the Netherlands in dramatic penalty shootout. Now, the round of 32 clash finished the draw after the extra time before Morocco held their nerve to win the shootout 3-2. Goalkeeper Yassin starred with a crucial save, while Ismail Saberi scored the winning penalty to send Morocco through. Germany's FIFA World Cup campaign is over after a heartbreaking penalty shootout defeat to Paraguay in the round of 32. Now, the match finished 1-1 after extra time before Paraguay held their nerve to win the shootout 4-3. So the result sends Paraguay into the round of 16, while four-time World Cup champions Germany suffered an early exit from the tournament. It's another major upset in a World Cup already full of surprises, with Paraguay keeping their dream run alive. Japan's World Cup journey has also ended in a heartbreaking fashion once again after Brazil scored a late winner to seal a 2-1 victory in the round of 32, denying Japan a place in the last 16. Now, Japan had battled hard and looks set to take the game into extra time before Brazil struck in closing stages. Now the 5-time world champions now move into the round of 16, while Japan's wait for a first ever World Cup quarter-final appearance continues.
Get in Ashwini Agarwal, founder of Demeter Advisors, on the show. Ashwini, great having you as always. Thanks for taking the time out. Is your smile telling me that you're constructive on the markets because oil has cooled off, the conflict seems to be nearing an end potentially, so the macros have improved a bit? Or is it that it is still unclear as to what to do?
No, I am a little bit constructive for all the reasons that you mentioned. Historically, at least, stabilization of the rupee has been a predictor of FII inflows, FPI inflows. And to that extent, I think maybe not now, but once the FCNRB deposits have gathered some momentum and the rupee looks to kind of be stable, then I think, you should see that event playing out in the sense that FPI portfolios inflows turning positive, which should be positive news for Nifty and the large caps, because large caps have significantly underperformed the small caps over the last 3 months. Such a wide performance divergence is not usually observed. So to that extent, I think, you have some room for the large caps to move up. I just hope the Iran-US, kind of dance doesn't get messed up. We continue to see a lot of mixed news out of the Middle East, and I think that's concerning. But I'm hoping for the best there.
The strange thing about the Iran-US dance, as you call it, it seems to pick up pace only on the weekends when markets are shut in the US, and then by Monday morning, they go in for a pause. But having said that, for India and for Indian equity investors, what becomes the biggest factor now as that threat recedes? Is it the spillover effect of the inflationary impact that we saw in the first quarter?
So, Tamanna, my sense is that there are a bunch of things that, Indian investors have to think about. One is, how does the earnings season pan out? Earnings season is very difficult to predict this time around because there are going to be a bunch of inventory gains and inventory losses. A lot of it we will not be able to foresee. Second is that the rains are playing truant. Historically, again, GDP growth, agricultural output hasn't had a significant impact of late on overall growth from poor monsoons, but I think consumer demand may slow down a little bit, and that's something that we have to watch for. So those are the two issues which, will probably determine investor sentiment. Mind you, the earnings momentum, if you think about it, if you take fiscal 26 in perspective, first quarter was the weakest, followed by gradual strengthening across the quarters, with fourth quarter being pretty decent on earnings. I think that narrative may get a little bit challenged in the short run. And what I've seen is that retail investors or domestic investors are very sensitive to quarterly earnings. That's not my preferred way of looking at things or investing, but be that as it may, one has to recognize that fact. And that, to me, could be a bit of a hiccup, especially on the broader market where you see a lot of sort of hard to predict variables coming into play for the first quarter earnings. My sense, though, is that over the next 2 years, you are looking at a scenario which is a little bit positive, because I don't think there are any macroeconomic imbalances. The worst of the rupee is behind us. Investment seems to be picking up. Domestic demand seems to be picking up. Credit growth is signaling positive cues. Valuations are not very attractive, but they're not very expensive either. So I'm hoping that we'll muddle along with kind of low teens to mid-teens type of returns.
Okay. Ashwini, what about the auto pack? I think the Delhi EV policy may be throwing a spanner in the wheels of the ICE plans, but a lot of notes currently talking about very bottom-up ideation within autos. So Maruti gets an upgrade despite the fact that it does not have as large an EV portfolio, if you will. But M&M also gets an upgrade because EV penetration is going up. And then there are two-wheelers, etc. How do you kind of separate the wheat from the chaff here?
Neeraj, I think, like you said, it's very bottom up. While EV is obviously gaining traction, it is not a one-stop solution. I continue to believe that even 5 years from now, there will be a significant number of gasoline or diesel vehicles on the road. As a vehicle owner, unless the charging infrastructure becomes ubiquitous, especially with public access, it's not possible to rely completely on electricity, barring for intra-city runs and short runs. So my sense is that automobile is more about consumer demand, and consumer will choose between petrol and EV, depending upon their circumstances, how much do they drive, what is the charging infrastructure available to them, and so on and so forth. So while the Delhi policy, I did read about it, is probably there for the kind of pollution Delhi faces, I don't think that's going to be true for the rest of India. So I think it's going to be very bottom up. People who are winning market share, people whose sales momentum is continuing to be strong, I think those stocks will do well.
Okay, thank you so much, Ashwini, for speaking with us.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management.
Markets end in the red today for the second consecutive session amid volatility. Nifty below 23,900 on weekly expiry day. The benchmark index has shed a little over 8% in 2026 so far, weighed down by an FII exodus on account of the Middle East war. US President Donald Trump says talks with Iran to take place in Doha, adding that they would focus on stripping Iran of its nuclear capabilities. However, the Iranian Foreign Ministry says that the Iranian delegation is only visiting Qatar to advance efforts for release of frozen assets. Sources tell NDTV Profit that the government has cleared 1.25 lakh crore rupees of semiconductor mission's next phase. India is expected to cater up to 75% chip demand domestically by 2030. HDFC Bank in focus after key management appointments. Former IAS officer Rajiv Kumar appointed as a part-time chairman, while Puneet Sharma of Axis Bank designated as CFO from 1st September. Adani Port strikes a big-ticket deal with Mundi, a unit of Mediterranean Shipping Company Group, to offload a 49% stake in the Vizianzam port for $1.4 billion. Dixon Technologies shares jump after sources indicate that Dixon and Vivo joint venture is moving closer to receiving the government's final approval. Kharif crop sowing drops nearly 23% as weak monsoon delays the planting across India. Weak sowing raises risks of food inflation and rural slowdown. Prime Minister Narendra Modi to chair a meeting with all secretaries today. Review of reform initiatives on the agenda. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and let's take you through all the important stories of the day in the next half an hour. First, beginning with the equity markets, and markets stay choppy in trade today. Nifty ends near the day's low point, below 23,900 levels, remember, and Sensex down over 250 points. Now, some of the stocks like Maruti, Titan come out as the top gainers on Nifty 50, while Eicher Motors, Tata Consumer lag behind, and broader markets really outperform the key indices today. So that's the snapshot of the market. Jasmeet is right here to complete the roundup of the market action and the highlights for the day. Jasmeet.
Well, a weak day for markets today. Nifty 50 ends in red for the second consecutive day in a row, and Nifty 50 is down about 0.3%. Now we look at the top losing companies in Nifty 50. We have companies like Eicher Motors and Tata Consumer Product, both losing the most. While the Eicher Motor was down about 5% and Tata Consumer Product saw a downtick of nearly 3%. In terms of the broader market, we see a complete opposite image. While broader market outperforms the benchmark, and Nifty Small Cap 250 and Mid Cap 150 ends in green. In terms of top gainers in Mid Cap 150, we have stocks like Cochin Shipyard and Coromandel International, both gaining the most in Mid Cap 150 space. We look at the Small Cap 250 when that ends in green, and the top gainers of Small Cap 250 are stocks like Ola Electric and Transformers and Rectifiers, both gaining the most. When we look at the sectors end on a mixed note. While the top losing sector is Nifty IT, and Nifty IT has been seen that extended fall over the time. Now in terms of the top gaining sector, we have Nifty Defense, has gained about 1.4%, and in terms of top gainers in Nifty Defense, we have stocks like Paras Defense and Cochin Shipyard, both gaining the most. In terms of percentage wise, we do know that Paras Defense is up nearly 9%, while Cochin Shipyard saw an uptick of nearly 5.5%. When we talk about the losing sector, that's Nifty IT, and the top losing stocks in Nifty IT are stocks like LTM, down about 4%, while Infosys saw a downtick of 3.5%. When we look at the key trends, we do make a note that Nifty Defense snaps its 4 days of losing streak and gains in today's trade, while Nifty Oil and Gas snaps its 2 days of losing streak in today's trade. In terms of Nifty Financial Services, Nifty Bank and Nifty FMCG alongside Nifty PSU, but down for the second consecutive day in a row, and Nifty IT is down for the third consecutive day in a row, showing that extended pressure that the IT industry has been seeing all this while.
All right, Jasmeet, thank you so much for getting us the good roundup on the market action for the day. Let's focus on the important macro data that's flashing on your screen. April to May fiscal deficit at 9.6% of the FY27 target. It comes at 1.6 lakh crore rupees. So that's the big number that we are really tracking at the moment. Remember, for this one, this financial year, the April and May fiscal deficit at 9.6% of the FY27 target. So that means for 2 months, almost 10% has been clocked in terms of the run rate. How are we really stacking up? And on the other hand, how is the macro data really looking to support the economy? That's something to really ponder over. Fiscal deficit has come in at 1.62 lakh crore rupees as we begin this new fiscal year, April to May. And that fiscal deficit has been clocked in at 9.6% of the stated FY27 target is the number that's flashing on your screen. And fiscal deficit, the numbers that we have in terms of the amount is 1.62 lakh crore rupees that has been clocked in. And those are the numbers that are flashing on your screens in terms of fiscal deficit data coming in. So those are the numbers that we are really looking at. Almost 10% of the fiscal deficit of the FY27 target has been brought in. All right, Ranjan Ratna, who's an economist, joining in to decode these numbers and tell us what this really reflects about this particular fiscal year's economic health of the country. Thank you so much, Ranjan, for joining in. So April-May fiscal deficit at 9.6% of FY27 target. How does this really stack up and what does this show for the economy?
Good afternoon, Nisha, and thank you very much for hosting me and asking me. Just released the data, and as you have rightly said, this being 9.6% the fiscal deficit for the target. The government aimed for 26-27 4.4% as the target, and this 9.6% is, of course, kind of more than double than what they estimated for the full year. But definitely for this April-May fiscal, when we are talking about, it has several factors to be considered in mind, and most of them which are the external factors beyond the government anticipated plan, and mostly this has emanated, or this we could see is an effect of the US, Israel, Iran war or the conflict, as well as the Strait of Hormuz, which we saw leading to rising crude petroleum prices. Now, it's lesser than pre-war, but that definitely has affected many of the countries, including India, because the outflow of the foreign exchange has to be more for importing the same amount of quantity, not only oil, but it had also effect on other things. The global supply chain disruptions were seen, and that also led to high transportation cost of anything which you are importing or anything that you are exporting. We have also seen rupee devaluing during this period of time. So it's a mixture of all these external factors mostly, which have led to this fiscal deficit of 1.62 crore, which is 9.6%, as has been rightly pointed out.
Right. Looking at these numbers, Ranjan, of course, there were many external factors which were beyond the control of the government, and rupee also depreciating and actually reduced our purchasing power, made things much more expensive for us. But all that is now receding. At the current moment, we are sitting much better when it comes to the oil prices and the rupee level. While we look at the future numbers when the war was still on in May, June, June period, and that is what is going to be impacting the fiscal deficit numbers going forward as well. Have you penciled in the kind of impact that could be seen in the next fiscal deficit numbers that will be shared?
For May and June, if you will see, I have anticipated that it would be lesser. It would, I think it will come to around 6% for the next for May and June, but it won't go to 4%, of course, because till May, we have seen these and first week of June also, and still there are uncertainties. US and Iran are talking. Things are said to be normal, but still a couple of days ago we saw again some ships to be destroyed. Iran claiming that they will still control the Strait of Hormuz. Sure. Still there are uncertainties, but if things go the way which is at present, even as this stands still, then we might reach to between 6 to 7% from this 9.6%.
All right, so it is definitely reducing on a downward trend in terms of the deficit, Ranjan. But government will have to look out for the recovery if they have to maintain the fiscal discipline for this particular year, considering that we had an unusual circumstance because of the war. Thank you so much for joining in with your expert take on this particular matter. But going on to the global news developments, well, the US and Iran are set to hold crucial talks in Qatar, signaling a possible shift towards de-escalation. But Iran has denied any direct negotiations with Washington on a broader deal to end. The conflict in West Asia. Instead, Iran's foreign ministry says that its delegation is heading to Qatar to discuss the contours of an interim arrangement. In fact, Iran has also clarified that this visit is focused on advancing the efforts to release its frozen assets, not formal peace talks with the United States. In fact, listen in to what Donald Trump said about the ongoing talks earlier.
The meeting in Doha is going to be perhaps important, perhaps not. We're going to find out. But we're winning militarily. It's almost won militarily, I would say. And it's really very simple. It's the denuclearization of Iran. We don't want them to have a nuclear weapon, and they're not going to have a nuclear weapon. They've agreed to that, in all fairness.
All right, the Finance Ministry has cleared a 1.25 lakh crore rupees outlay for the India Semiconductor Mission 2.0. Now, the government aims to meet up to the 75% of the country's chip demand domestically, and Atmanirbharta really showing here by the year 2030 is the target. In fact, my colleague Rishabh Bhatnagar joins us with all the details on this big plan on semicon manufacturing. Tell us, Rishabh.
Right, what we're picking up with respect to the India Semiconductor Mission, the second version of which is expected to be rolled out very soon. What we're picking up from official sources is that the approval by the Finance Ministry panel for roughly about a 1.25 lakh crore rupee outlay has been given. This is yet another step towards the rollout of the scheme. Now, just the final bit, the final nod by the cabinet is left before this scheme actually comes out. Remember, this the first version of the scheme came out with roughly 76,000 crore rupees worth of incentives. You've had more than now 12 facilities being approved under this mission so far in the first iteration of this mission. Now, the second version of the India Semiconductor Mission is set to come out. What we know about this is that this will have a much sort of a broader approach. There will be focus on gas makers, on specialty chemical makers. The ancillary ecosystem essentially is set to gain from this particular development. We've already seen that the Finmin nod has come in last week. Now you have the cabinet approval that's left before the final rollout. What the government aims to do with this mission is, of course, to have about 75% of India's India's demand be met domestically. And that is something that's very important to cut the sort of forex spend that we currently do on semiconductors and related parts. So that's something that we're picking up from official sources.
All right. Thank you so much for all those important details coming in, Rishabh. Now, big signals coming in from the insurance space. The IRDAI chairman says that the investor interest is really picking up sharply after the government really opened the sector to 100% FDI. In fact, new licenses are being cleared, foreign players are lining up, and general insurance is leading the growth charge for now. Listen in to Ajay Sheth, who is speaking to NDTV Profit.
Good afternoon, sir. Piyush from NDTV Profit. In May, the government had opened up the 100% FDI in insurance sector. I just wanted to understand from IRDAI perspective how many applications we have got from foreign entities, has there been any progress, any JVs that have been, sought for on this FDI and insurance, any interest?
See, after the sector was opened up for 100% FDI, from the authority, we have already given 2 licenses to general insurance. One was approved yesterday. I'm not sure whether my office has made the announcement as yet, but one was approved yesterday. There's a lot more interest is coming on general insurance side. And the reason is obvious. As I mentioned it, last 10 years, life insurance sector grew exactly as per the economy, whereas 2.5 times, it became 2.5 times. General insurance became 3.5 times. So that growth is more. But I do see the life insurance also has the potential to grow at the same pace because there's a large unmet need. And that's what I would like to work with all insurers, that how we can make that happen, what ingredients are needed. Coming to your question, there's also a lot of interest coming in for some of the foreign promoters seeking to get into 100% ownership position. There are few conversations happening, and one application has been approved already. Another one is with us at this point of time. Not 100%, but going up to a fairly large number, and with the intent to go maybe the full go at some point of time. Very recently, there has been an application on life insurance, and that was a very welcome development, because a large foreign insurer coming and taking a big position, that is something showing not only us, we feel that this sector has got the potential, even other foreign investors also feel, the promoters have feel that there is a potential in this sector. Precise number, I would rather avoid because that has more of a commercial nature. Let things fructify and then you will get to know in due course of time.
All right, moving on. Dixon Technologies, remember, proposed joint venture with smartphone maker Vivo is moving closer to receiving the government's final approval. In fact, sources do tell NDTV Profit that the centre is in the final stages of issuing this approval letter after the proposal was cleared by an interministerial panel earlier this month. Now, the partnership is, remember, expected to significantly boost smartphone manufacturing here in India. According to the company's management, well, the venture could eventually add 20 to 22 million smartphones units annually and also create a revenue opportunity of nearly 30,000 crore rupees over time. So that's a big JV coming in on the smartphone space. Now, India's home services market is getting more crowded. After cleaning and repairs, no broker has now entered the at-home salon business with its new brand, Zivora. But unlike the rivals really chasing the instant delivery, the company is staying away from the quick service race for now and betting instead on profitability as well as a largely untapped market. To talk more about this, I'm joined by Saurav Garg, who is the co-founder and chief business officer of NoBroker.com. Saurav, welcome to NDTV Profit, and there couldn't have been somebody better than me to really talk about this because I'm a usual user of the home services of salon services, and I quite like it. What is it that you're offering which is differentiated?
So, Nisha, I think we believe that at-home salon service is definitely a big convenience because if people have to go to a salon in today's traffic, it's very, very tough. So we think it's a large market. It's highly underpenetrated. Less than 10% of people who potentially use salon services use it at home. So there's a long way for the home services, especially the salon service, to grow. And No Broker is uniquely positioned because we have 4 crore users, out of which almost 35% are women. And these are typically women for which we have all the data, what rental they're looking at, what price of property they're looking at, what PIN code they're staying in. So all the data is available with us, which gives us a huge wedge into this market. And more than 1 crore people have already used our home services, things like cleaning, painting, repairs, packers and movers, and these kind of services. So I think a salon at home was a natural extension for us, and that's where Zivora comes in. And with the unique data which we have, I think we will be able to make this sector more organized, because I think one of the big pain here is that it's a highly unorganized segment, and the consistency of quality is something which is a very, very desired thing, especially in a beauty service. So we have our own training academy where we train all the people who go for a salon service at home, and the consistency of quality is something which we are aiming for.
That's right. In fact, Saurav, this particular place has only one important aspect, that is the consistency of the service and the quality because of the brand name that it gets attached to and the training that you give. Apart from that, this space has been working with at-home services for a very long time and at a lower price than the salon services. Now, what you are doing is a little differentiated, which is not on quick service or instant, but focusing on profitability. How are you going to do that?
Yeah, so like I said, that I think our focus is always on quality, because here what is more important is that when a woman books a service, they get a delivery which is what they're aiming for, not something which is delivered in like 10 minutes, but they're aiming for the right kind of a facial, right kind of haircut, whatever they're looking for is delivered consistently, and that's what would be the aim for. And I think, like I said, that the data which we have puts us in a very unique position, because we know which PIN codes, what price range people have looked for a home, which directly corroborates that what kind of pricing is possible over there, what kind of demand is possible over there. And a lot of AI can be used to predict that people who are using home services, which of these will become a salon service user. And we also see that increasingly more and more women, I think we are the only real estate platform which have 35% women on the platform. So that also puts us in a very unique position. And that is what we are going to deliver with Zivora.
And what about, Saurav, the intense competition in this particular space? Because I already use a service, I'm pretty happy with that. And what will it take for you to expand and compete in the market? What will be your moat here?
Yeah, so I believe that this segment is highly underpenetrated. Less than 10% people are using a salon service at home of the people who are actually going to a salon. So 90% people are still going to a salon. So we believe that is where the entire moat will be coming from. One, people who are going to a salon who would start choosing a salon at home. Secondly, people who are using a at-home salon service, but from an organized player, where quality is always suspect. These are the two pieces from where the entire customer flow and the demand will come from.
Right. So, Saurav, very interesting points. But as a regular user, I would also say that's also the real estate. While you benefit by taking the real estate off the user, but in India, it's also underpenetrated, this kind of service to a large extent, because people don't have that kind of privacy and real estate in their own house. And that's why probably an outside salon also works in many categories. So that's my one feedback to you. But great chatting with you, and all the best for your new venture. Thank you so much for joining us. Thank you. All right, completely out of time on this edition of Profit 360, but do stay tuned to NDTV Profit. Thank you so much.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I'm looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his
presented by Suzlon, good energies that work.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. In this show, we get in very interesting companies and to see whether any alpha can be made or not. And we try to decode the entire picture and also get the management to talk with us. But before we start talking about the company for today, let me give you some hints. Try to guess the company, what this company I'm talking about. The first hint, it's a listed garment exporter. Also recently a big beneficiary of the FTAs which have been recently concluded. Stock is up 18 times in the last 5 years. It has been a multi-bagger. It's of course in the textile industry. The clients include Ralph Lauren, Target and a lot of global marquee players. And of course, we had mentioned earlier about the FTAs as well. The company in focus, try to understand what this company is. It's of course quite global, as I had spoken about, and that's the second part of the company's name as well. The company in focus is Pearl Global. This is what we are talking about. But why are we calling this company? What do we want to know more? What's something incremental right now to call the company right now? The first question, definitely try to understand the impact of FTAs. Is there more re-rating left for the exporters? Because it takes time to actually judge this company. Also, we'll try to understand the dynamics of India, Vietnam, Bangladesh businesses for the company. They have sourcing in different countries. So what works best? We'll try to decode that business model for you, and also the confusion on tariffs. What happens now? Is it the old tariffs? Is it the new tariffs? Or is there something else at play for these exporters? The company's growth outlook for 2 to 3 years, we have to understand, where does the company stand at the end of FY26. Also, the capex and expansion plans going ahead. Of course, FY26 was a good year, stock run up, but will that momentum continue or not? These are the key questions we will be actually asking the management, and the right time to enter. If you're an entrepreneur, if you want to get into the textile business, exports especially, is it the right time? That's one question also. It's pretty interesting for me to ask. And of course, the last one, the benefits of rising spreads. Yarn and polyester in Q1. Does it benefit the company? It's a fully integrated company, or there is an angle to the forward integration. Pallab Banerjee, MD of Pearl Global, will be talking with us in a while. Stay tuned with us and he'll answer all these questions. But what does the company actually do? Company के बारे में बताते हैं. One by one, we'll get you all the layers about Pearl Global. Of course, established in the year 1987, so almost you could say a 40-year history. Company is one of India's largest listed garment exporters, and we get into a bit of depth for this company. That is, the products includes knits, woven, denim, outerwear, activewear and athleisure. So there is a big spectrum of products which the company is offering. 25 manufacturing units they have, but I would like to point out it's just not only in India, it's spread across Indonesia, Bangladesh, Vietnam, and interestingly in Central America there is a country, Guatemala. That's pretty interesting, especially for the US clients. They have kept this exposure. The company has a total capacity to manufacture 101 million pieces per year. This is the most updated number which we have got from the fourth quarter or the FY26 numbers. Provides end-to-end supply chain solutions. This is value as well as premium retailers. And I'll shortly give you the client list also, but hang on for that. Customers, of course, are located in US, European Union, UK, Japan, Australia and Canada. So a lot of developing nations are a part of their client list. In-house laundry capex, that's what they have announced for FY27. The amount is 250 crore rupees. That's where it's going to help the ROCs come back to that 18 to 20% mark. And remember, amongst the textile companies, this company is having one of the highest return ratios as well. But let's understand the revenue breakup, how things are looking. I've broken it down in US and non-US markets. It's all even Stevens 50-50%. But remember, majority or almost the entire revenue comes from exports only. Of course, in Indian brands, India also there are some global brands which they focus on. But who are the global clients? Let's talk about it. We have Chico's, we have Cole and Muji. This is of course a Japanese brand, but looking at the other key clients also for global, let's focus on the other names as well. There's of course Ralph Lauren, Target. Target is of course in the value retail as well. So these are the bigger brands as well, which are the key global clients for Pearl Global. Interesting, right? Let's move ahead and try to understand the other picture. And that's the geographical revenue split of the product. It's knits. That's around, you could say, almost 27%, and the remaining 73% comes in the woven segment. These are the product specific, breakup coming in. But what may work for the company? That's the big question. Analysts remain bullish. Only 6 analysts are tracking the stock. All have given a buy rating. But remember, stock has run up. Strong industry tailwinds are coming in all across. We have already covered that. But in the long term means this might be a structural change. Diversified manufacturing presence. So any problem happens in Bangladesh, they resort to India. Any problem in India, they resort to America for manufacturing. So that is pretty strong. Strong incoming capacities which are coming in that will aid in the benefits, going ahead for the production and the long-term vendor agreement for Maggi clients. So there isn't much of non-stickiness of a customer. It is a very customer stickiness friendly company. But what may not work? Short-term price escalations. The management has spoken about it. So you can expect that in the first quarter. The execution risk in case the FTAs which are already announced, is there any delay? And there's of course a procedural risk as well. And also the India-US trade deal, the completion is still an overhang right now. So definitely short term and medium term there is volatility, but yes, long term seems like the story is pretty strong. But let's try to understand with our KYC ratings also, how do we judge a company? Of course, it includes income statement, balance sheet, cash flow and return ratios as well. But there are other parameters जिस पे आपको ध्यान रखना होगा. This of course includes shareholding, street cred, and interestingly I have got for you 5 companies where I'm going to do the valuation check as well. So stay put with us and I'm going to give you those 5 companies and try to understand whether this is the cheapest stock in the textile space or not. And remember, this is after the rally coming in, the outlook of the industry and the company as a whole. Let's start with income statement to show you what's the strength coming in, and look at the CAGR numbers. It's a pretty decent 15 to 20 plus growth coming in the last 3 years, and that is where a little bit of conviction comes that this has translated into numbers. A good structural up move coming in, almost better than the peers also. And if you look at the numbers, pretty decent. The margins also saw a good jump coming to the double digit. Look at that, 10.3%, and PAT also seeing a good up move coming in. And these are the benefits of a fully integrated player. Largely, this has been pretty decent, around 9.3, and whether it touches the 10% and holds, that's the key question to be asked. But as of now, The numbers seem strong, so I'm going to give this a thumbs up. Let's get in the balance sheet and let's see what's happening here. Of course, a little bit of borrowing levels that has gone up around 687 crores as per FY26. But on the other hand, even the cash bank balances that has gone up almost 747 crore rupees. That means there is a good balance sheet management also at play. But as of now, I'm going to give this a neutral rating. Cash flows on the other hand, they seem to have been improved, as compared to what we saw in FY24 and FY25, and then you compare that with FY26 and look at that, especially the conversion numbers, they seem pretty decent. The net cash flows have also increased. This of course includes your operating, investing and financing activities, all three put together, and it's pretty decent. Look at that, 437 crores of cash flow from operations coming in, and that is showing strength in overall numbers. So as of now, it's a strong thumbs up when it comes to the overall cash flows. But return ratio is something where we have seen a good momentum coming in. First of all, we get in the ROC numbers. These are the adjusted numbers from the company itself. The story starts from FY22 and that is where it starts going up. And now it's maintaining that 28 to 30% mark as well. A slight dip coming in on the capacity expansion and capital deployment. Let's pull up the ROE numbers also to show you what's the growth looking like. And of course, the ROE numbers, this is largely pretty stable coming in, and we see that 20% plus, these rates are coming in. FY26 also we see a pretty, slight dip coming in. But net, it's a neutral rating for the return ratios when it comes to Pearl Global. Let's talk about shareholding and explain you how things have panned out. Earlier, there was a very little FI and DI exposure. DI was literally non-existent, just 1% 2 years ago. But after what we have seen in textile, the entire industry, look at that, it's up 19%. Of course, FIs have also slightly trimmed their position, but still at 6%. Promoter stake, of course, coming down because of larger blocks coming in. Public stake is down, it's almost 14%, but look at the DIs, 19% stake they're holding. And that is where a lot of interest has come from the mutual funds, especially as textile as a theme. So it's a strong thumbs up when it comes to the shareholding. Let's talk about the street trade, how much stock returns have come in. And if you are a holder of the stock, congratulations, be it short term, medium term, long term, you have made money in all the cases. Last 5 years, the stock is up 18 times. That's a big number to look at. If you're a long-term investor, you have been rewarded. Congratulations. But medium-term basis also stock has done well. From March low, stock is back almost 47% up, 1 year 33%, and this year itself, stock has given 23% returns. So even if you are a medium-term shareholder, you have made money in this counter, and because of that, I'm going to give this a strong thumbs up. And remember, whenever a stock runs up, of course, at times valuations do become a bit questionable. But let's have a look at the peers, how things are setting up. I have taken the 12-month forward P ratio to judge the companies. Vardhman, Gokul, still you could say Gokuldas Exports is expensive, more than double when it comes to the forward P valuation, and still on a cheaper side, companies comes in at 33 times. But of course, from its historical numbers, it is higher as well because of the stock run up. Compare that with KPR Mills and Kitex Garments, the valuation is pretty expensive. So amongst the peers, the valuation is cheaper for Pearl Global, but nevertheless, from its historical numbers, it is slightly higher. So I'm going to keep this neutral rating when it comes to the overall valuations. But let's talk about the outlook. What are the key factors you should be watching out for? Is of course, the beneficiary of the recently concluded FTAs. This is a long-term, strategy, and the textile positions looks good. The clarity comes from the US tariffs. If that comes in, that becomes another major trigger. But right now, it is a slight overhang. If you are noting that down, the capital commitments range between 200 to 250 crore rupees for FY27. And lastly, they foresee that the energy cost escalation might impact in the first quarter. So there are some hiccups. It's not full rosy picture, and because of that, I have given this a neutral rating for the overall outlook. But come over, let me explain you the entire KYC ratings for Pearl Global and where does it stand. Of course, the numbers, be it income statement, cash flow, all of them doing well. That's why I've given them a strong thumbs up. Return ratios, a little bit of moderation is at play, but nevertheless, it's on the higher side if you compare that with another textile company. Shareholding, DI is favorite. DIs have been lapping up, and on the other hand, StreetCare, the stock has been a multi-bagger if you are looking at a longer time frame. Valuations and outlook, I presume it's a neutral rating, but the total KYC rating for Pearl Global stands at 6 out of 8. It's largely on the higher side of the average numbers which we give, but let me give you a history about this company. This is a company is coming second time recently in KYC. November 2025, the historical ratings we had given was 5.5 out of 8. Largely a slight increase has come if you compare that after the next 6 months, and it's around 6 out of 8 which we have given for Pearl Global. And of course, the stock has run up also in this setup. But let's talk about the speaker. We are joined in by Pallab Banerjee. He's the MD at Pearl Global, and interesting tidbits about him. He has more than 30 years experience in this apparel segment, out of which almost 20 years have come in from MNC Gap. And that's a big name. Of course, he was the head of India, especially in the sourcing category, and that global supply chain solutions is something which he specializes in. And to put that in perspective, that'll be very interesting to have a chat. And now we are, of course, joined in by Pallab Banerjee. He's the MD at Pearl Global. Good afternoon, sir. It's always a pleasure to have you with us. I want to first understand the impact of the FTAs. Is there a re-rating for textile companies at a play right now?
Thank you for having me on your show. Yes, FTA is an important milestone for India as a textile industry, and especially the garment industry. And I think it will have a lot of positive effect, despite what the normal condition is worldwide at this point of time. But still, I think FTA is definitely a major milestone, and most of these customers who are from these countries like UK and European Union, they definitely would like to have a better presence in India with the FTAs coming into the effect. So that should give both sides interest, like from the players out here. That should inculcate better capacity planning or increasing their capacity. That means more investment, and across various textiles and fabrics, which have been quite limited in India. As a country, we have been very limited to only cotton and cotton-based products so far. So this kind of milestone will open it up for multiple products, and much more traction I think we will see.
And Pallab, what's the dynamic of your India manufacturing, Vietnam and Bangladesh? All three countries are there. How does this dynamics play out for your company?
So Pearl Global has got manufacturing across the globe. Like we have manufacturing units in Bangladesh, Vietnam, Indonesia, India and Guatemala. In terms of what we see, the two countries which have done really well in the apparel sector are Bangladesh and Vietnam. This is after China. So as the China plus one strategy played over the last few years, I would say, what we are seeing is that these are the two countries which has really benefited, and the ecosystem that has got developed in these two countries are very, very strong. So Pearl Global definitely takes that benefit of being present and historically for a long time in both these countries. And that's the advantage that we have seen has come to our business over these last 3-4 years in a good way. Compared to a Vietnam or a Bangladesh, India is also manufacturing. India and Indonesia, they are very similar. Although the proximity to China for Vietnam and the amount of raw material that is available and the ecosystem that got developed over the years in countries like Vietnam and then eventually in Bangladesh over the last 10 or 12 years we have seen is very dramatically different compared to India. Bangladesh had the advantage of no tariff or no duty for countries like UK, European Union and Canada. That really helped them to develop the industry very competitively. And of course, their costs were low. So both these things helped them to build up a very massive industry. And Pearl being there, we have seen and we have taken the benefits, and we have got very efficient factories running in both these countries of Bangladesh and Vietnam.
Right, Pallab, but there's always that question on the clarity of tariffs. What is that situation right now for the industry right now? Because there is still, it seems like there is an overhang.
So from US point of view, yes, there is a lot of, I would say, changing dynamics that we are seeing over the last 1 year. So the initially under the emergency power, the IEEPA, I think President Trump had implemented a reciprocal tariff. That has been shot down by the Supreme Court there. So currently there is a section 122, which is applicable till 24th of July. And that is a 10% flat tariff for all the countries which are exporting into US. And this particular tariff, this 10%, is levied on top of the MFN duties that were prevalent. MFN duties were, depending on which HSN code, every HSN code had a very different duty structure. And it used to vary for linen kind of products. It used to be in the less than 10%. Cotton products were between 10 and 20, I would say. And the synthetic products were more than 20%. So that's the kind of classification that we had for MFN duty. And on top of it, there's a section 122, which is currently prevalent till 24th of July. Now, after this, Trump administration is doing some kind of investigation on all these countries. If these countries are importing or using the benefit of countries which are using forced labor and all, and they want to penalize these countries. So that penalty can be as high as 15%. So that's something India is also undergoing that investigation as compared to many other countries like Bangladesh and Indonesia. In fact, all the countries, exporting countries into US are at this point of time undergoing that investigation. So that thing is the open thing that we have still. So what we hear from the grapevine is that if they put India under some kind of penalty because of this importing goods from China or any other country where there is a forced labor, so that can give to an additional 12.5% tariff. But once this bilateral trade agreement will be signed, which India and US, both the countries have worked towards getting into an 18%, what we heard from our ministers. So I think that's something would be the final one. And technically speaking, like this 18%, once it is comes into effect, that should take care of the MFN. So the MFN should not be there, it should get replaced. But again, with Trump administration, things have been so volatile for the last 1 year. We don't know what will be the final outcome.
Like from the industry, Pallab, what's the growth outlook looking like for the next 2 to 3 years for Pearl Global?
So Pearl Global, we have been planning a growth. We have committed to our stakeholders that we are growing at the rate of anywhere between 12 to 15% on a CAGR basis. That means even the tough years like last year, we did grow significantly, and even also before, we have seen that we have grown at least about 9-10%. But in a good year, our growth has been much better. So CAGR wise, we have committed 12 to 15%, and by 2028, our milestone is to cross the 6,000 crore milestone that we want to cross as a top line. So I think we are significantly on, in terms of very solidly, I would say, on track on that plan.
And in short, Pallab, what will be the capex and the expansion plans ahead? I know there's a 250 crore kind of allotment for FY27.
So we have been improving our capacity. So this year, on 31st of March, we declared that we have already crossed 100 million pieces capacity. So with that means like the 6,000 crore is possible at this point of time with our existing capacity. But current financial year, which we're undergoing, we are further adding to it. So by 2028, we are still expecting to have a capacity in the range of 120 million pieces plus annually. And we should be able to do more than 6,000 crore very comfortably.
Well, right time to enter the textile exports. Is it that for an entrepreneur? This is a pretty interesting take coming in from a lot of viewers. They wanted to ask, is the right time?
I think textile is interesting, and I would say that all the time is good because all human beings, we always need clothes. Although, in terms of exports and the kind of sector that the export market to the developed countries, so there I think there are some barriers, like the understanding of the laws, the regulations, the tariff. Those are the things I think are a kind of barrier, and also the compliance standards, which has been also involving the kind of sustainability that they want. So those are things like somebody has to really take care of. But purely if you're making a textile or garments and catering to even to domestic market, I think it's always a good time.
Right. Thanks a lot, Pallab, for giving your views on the company and the industry perspective. It's always a pleasure to have you. So pretty interesting story of Pearl Global and how the India's textile industry is faring. And for these interesting stories, keep watching KYC and stay tuned to NDTV Profit.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise.
Aswath Damodaran is often known as the valuation guru and rarely speaks to Indian media, which is why I'm so excited for this interview. He's one of the most respected voices in the financial world globally, a professor at the NYU Stern School of Business, and someone who speaks very clearly about what is going around in the world. Right now, he's gone viral for talking about what he thinks SpaceX should actually be valued at. With that, let me welcome Aswath Damodaran on the show, and thank you for giving us time on this interview. Aswath, my first question to you is around those valuations, and I'll come to SpaceX specifically. But are there very real concerns about valuations right now with large AI players around the world?
No, I mean, people are seeing it, but remember, markets are driven by consensus, not by what any individual, no matter how credentialed, thinks about the market. And the consensus view is there are concerns, but there is potential. And for the moment, potential is winning out over concern.
All right, so then let me put it this way. Is the euphoria you're seeing right now reminding you of the dot-com boom that you have looked at so closely? Are you seeing elements of that?
No, I don't. I mean, I think that is one of the most wasted exercises in markets, is to keep looking backwards and trying to recreate what you saw. And I mean, it's an exercise that old people play, which lets them think they have an advantage over younger people. I was around in the dot-com boom, so I've seen it happen. Markets never repeat themselves. So you've had things that play out over time. There are some common features that play out. But I generally don't look back and say, this looks like the dot-com boom. There are elements of it that will always show up in any boom. But for me, it's always about looking forward. And I think the concerns here are valuation concerns. Ultimately, everything is a valuation concern. Because ultimately, valuation is about, what's your revenue growth going to be? How profitable are you going to be? And how much will you have to reinvest? And every single concern can be framed in one of those three questions.
Aswath, let's talk about SpaceX specifically. The euphoria that we saw, was some part of it about the cult of Elon Musk?
That's part of it, but Musk is a mixed story now. There are people who will not buy SpaceX because Musk runs it. So the net effect of Musk is not necessarily a huge boost in the stock price because there are just as many people who will not invest in SpaceX because of Musk as there are people who will invest in it. I think the reality is SpaceX is if you are creating a futuristic company in a movie, think Avengers, right? Stark Industries. You would create a company like SpaceX. This is not a tech company that makes software or apps. This is a company that actually does engineering. I mean, they create engineering marvels, getting satellites into space at half the cost of anybody else. Right now they're delivering internet service to Venezuela where nobody has broadband connection. And to the extent that Grok plays with Gemini and OpenAI and Anthropic in that market, it's potentially another big market. So there's a real story here, and I think part of the problem is because people are in two separate camps with Musk. Either he's the greatest entrepreneur ever, or he's a scam artist. They're incapable of seeing the middle ground, and there is a middle ground here. This is an amazing company. After all, I've attached a valuation of 1.3 trillion for a company with 20 billion in revenues. That requires a lot of story, a lot of potential, and a lot of stuff to come true. So you can have a great company that's not a great investment. Now would separate the two. SpaceX is an amazing company. It's a company that only Elon Musk could have created in many ways. But at the same time, at 1.8 trillion, I thought was overpriced. It's now over 1.8 trillion. So it's a great company where the price is not right for the moment. But that could change.
So for those who are invested in SpaceX directly, indirectly, they just have to wait it out till the valuations catch up.
It depends on whether you're an investor or a trader. 95% of people in markets are not investors, they're traders. And the difference is the following. If you're an investor, you value something and you buy it at a price lower than that value. If you're a trader, you buy at a low price, you sell at a higher price. It's a much simpler, in many ways, a much more honest game. You're not doing these dances with intrinsic valuation. You say, I don't care. As long as the mood and momentum are in my favor, if I buy at 200 and sell at 225, I'm going to make money. And I respect that point of view. And many people, I think, have to look in the mirror and ask themselves, am I an investor or am I a trader? If you're an investor, then you have to do your own valuation. You can't go off my valuation. That's my valuation, my story, my investment decision. Investors have to take ownership decisions. They can't listen on CNBC to somebody telling them that SpaceX is worth 1.8 trillion and go out and just buy the company because somebody told them so. That's not investing. That's just following the herd. Trading, it's all about mood and momentum. There are lots of people who will get rich on SpaceX by buying at the right price and selling at the right price. It's all about timing. There'll be just as many traders who will lose money on SpaceX because the timing is off. So if you be honest with yourself about the game you came to play. And once you made the decision, then you can decide whether SpaceX is the right trade for you if you're a trader or the right investment for you if you're an investor.
Right now, everything AI is gold, and everything which is not AI is just been discarded or ignored. Do you think there is a real justifiable reason for all of this excitement around AI?
I think it's an easy hook for both journalists and market experts to use, that this is the market entirely driven by AI. That is absolutely not true. I mean, intuitively, you might feel that is the case. But you know what? If you took the AI companies out of the market, markets are still trading at multiples of earnings that were higher than they were before AI came on. So are there companies that are benefiting from AI? Absolutely. But this is not a market that's being carried forward by AI and AI alone. There's a much bigger spectrum of companies. But one of the most interesting phenomena is in the last 2 months, the AI trade has actually turned sour for the most part. You look at NVIDIA, you look at the Mag 7, and the most amazing thing is markets have held their own. That tells you that markets are, there's a much bigger breadth to markets than people accept, but it's become this lazy way of saying markets are high because of AI. And I think whenever I hear that, I say, you've not dug into the data well enough to be able to then follow up on that statement. So I think that AI is helping markets, but the degree to which it's carrying markets has been overstated.
Point taken, Aswath, and I'll take that one for the team on behalf of all journalists. But let me contextualize my question. in the Indian context, for example, FIIs are leaving. They are, though, investing in other emerging markets, including Korea and Taiwan. And what we hear constantly is because India does not have an AI play.
No, but let's step back. Does South Korea have an AI trade? The only reason they benefit is they make chips that feed into AI architecture. So they're almost, accidental beneficiaries of the AI trade. They haven't developed an LLM or the AI products and services that really is the questionable part of the market. In fact, the benefit of being a chip company in this AI story is you're supplying the architecture to build these immense AI factories. And people are already spending this. This is not about the future and potential. This is already happening. So from NVIDIA all the way down to the architecture companies, and this includes some of the companies that provide the power to the data centers, that is the most tangible part of the AI story where the benefits are already there. And again, it's easy to blame AI for money leaving India, but there are plenty of markets which don't have AI trades that have actually done very well in the last couple of years. So while it might again be easy to blame AI for why money is leaving India, let's face it, foreign institutional investment is always a sheep trade. You go where everybody else is going. Now, South Korea, if you look at the last 2 months, has been catastrophic for foreign institutional investors. So if the argument that money is flowing because the AI trade is true, the money should be flowing back to India. So if it's not flowing back, then the question you got to ask is, what are the reasons the India story is not selling as well as it did 2 or 3 years ago? And again, it's good to get some perspective. Indian markets are down, but relative to where they were a year or 2 years ago, of course. But relative to 5 or 10 years ago, markets had a great run. Sometimes you need to take your profits and kind of consolidate. So before we attach big stories to why foreign investors are leaving Indian markets, I think the story has to be fine-tuned to what else is going on, what else can explain these ebbs and flows of foreign institutional investment.
I'm actually going to put that question to you. Why do you think FIIs are leaving in droves and not really coming back? A few years ago, the question was about valuations in Indian markets. Clearly, we're not as highly valued as we were even a year ago. Valuations have come off.
Indian markets have a fundamental problem, which is Indian investors, for the most part, are almost forced at gunpoint to invest in domestic markets. It's very difficult. I know it's easier now than it was 10, 20 years ago, but investing outside the Indian market has become easier, but it's still very difficult to do. So in many ways, Indians have invested in the Indian market, and they don't have the luxury of foreign institutional investors of taking their money out and going elsewhere. Is India a better price market than it was a year ago? Obviously. But it's still, if you think in terms of relative pursuit of my money, it's not a market that competes with another emerging market with the same amount of risk without the capital restrictions that India does. So I think that there's a cleaning up phase, and it might be healthy for Indian markets to actually take a pause, kind of consolidate and think about how things are priced. And that's healthier for markets in the long term, rather than this endless uprun where people basically come into the market expecting to make money no matter what. That's not a healthy equity culture. So sometimes developing an equity culture requires these consolidation phases. And for me, India is going through that consolidation phase. It's still by no stretch a cheap market. It's just cheaper than it was a year or two ago, and that's a relative statement.
There's an ongoing debate in India right now, and I want you to weigh in on about how domestic investors coming in through SIPs and other means are just providing liquidity for FIIs to exit the Indian equity markets. What do you think about this?
I think, again, the FIIs are not across Indian equities. They're in the large cap Indian equities, the liquid Indian equities. So, there are some questions to which the data has the answer. If the reason if this is all about providing funds, capital, exit strategies for FIIs, you should really have two divergent markets in India. You take out the large cap liquid stocks and you look at the rest of the market. The rest of the market should be incredibly cheap if this is all about exit strategy for institutional investors. I think that's part of the story, but that's part of markets. That's neither good nor bad. And my problem is not that they provide exit strategies for foreign institutional investors. It's that you're forced to provide that exit strategy. I think the Indian market would be healthier if the capacity for Indian investors to invest overseas was significantly expanded. But let's be clear, that's going to be painful. It's going to be painful for Indian equities because that phase where you have that transition is always going to mean a correction downward. And it's going to be painful for Indian companies that have had access to equity at what should really, what I would call below market rates. Rates lower than they should be paying given the risk that you're taking on. And I think for Indian corporates, that's a great thing to have access to this capital at below market rates, but it's not good for them long term to have that capital because they get lazy and they develop bad habits about how to invest.
You know, coming back to the question of AI, which seems to be the all-pervading point right now, how transformational at its core is AI? Because you were talking about how Korea has done terribly despite in the last 2 months, despite having that one AI trade. And what does it really mean for Indian IT companies?
Let me ask you a question. How often during the day is an AI agent helping you in what you do? I mean, you talk to Siri on your Apple, there's an AI agent in the background. You get on Google, there's an AI agent looking at what you're searching for and providing a summary. This is not an abstraction. This is in all our lives. So the notion that AI is like the metaverse, a passing fancy, that's out of the picture. It's clearly transformation. It's clearly big. But that doesn't mean it's worth a lot of money. And that sounds weird. This can be a big market where the competition is so intense that companies don't make much money. The unknowns in AI are not so much about market size. So the market size, I think, is going to be big. The question is, how profitable is it going to be? And what will companies, the AI companies, have to invest to deliver that growth? So the questions are more about business models that will make money than about whether AI is a big market. I think we have to concede that even in the pessimistic scenarios, AI is a market that could be in the trillions of dollars. And that's not necessarily good news because that means people are going to be losing jobs to AI agents. So it's a big market, but the questions that kind of hang over it, and I don't think even the big players know the answer to these questions. Is it going to make money for the companies that provide the LLMs and the AI architecture? And what will they have to invest to keep this engine going?
Aswath, to you, what is the most exciting AI story? Is it the chip makers, the LLMs, the data centers? Which part of this AI buffet do you find the most exciting?
I think almost all the big stories are still in the architecture. I mean, I think of AI, the AI architecture as building a big factory. Right? That factory needs chips, it needs data centers. There are all these companies that feed off it. They've been discovered already. That's the discovered part of AI. The LLMs have thrust themselves in the spotlight, so they've been discovered too. I think the big part, but they're both still the factory part. The products and services that come out of this factory are what will keep the factory going. And this is, I think, the most astonishing feature of the AI build-up. We've spent more money building this AI factory than any other infrastructure investment we've made in the last century. You can go railroads, you can go automobile companies. We've spent basically trillions of dollars building the architecture without a sense of whether the products and services that will come out of that architecture will make enough money to make this architecture worth building. I think the phase of AI where people will make money next will be in the product and service part. What kinds of companies are providing AI products and services that will make money for those companies? Not just sell a lot, but make monies. Right now, I can't think of a single company that said that's the company that's going to do it. But if you think about, if you go to the dot-com boom and bust, I mean, you go to 1997, 98, there are lots of dot-com companies. You don't know which ones would win. Eventually, you had a winner in Amazon. There will be a winner in this space. I don't know what that winner looks like right now. It might not even be public. But the winner will be a company that delivers products and services rather than the architecture company. I mean, look back again at previous booms and busts. The infrastructure, architecture companies were not the end winners, right? The dot-com boom, it wasn't Cisco, which made the networking equipment that ultimately ended up as the big winner. It was Amazon. And I have a feeling with AI, you're going to get the same phenomenon play out. It's not going to be the chip companies. It's not even going to be the LLMs. It's the companies that provide the products and services with that architecture and are able to do so in a money-making way that will be the big winners.
And can any of these companies come out of India, considering we seem to be entirely left out of the AI party?
Let's ask a more generic question, right? I mean, if you look at every boom in the last 40 years, the technology boom, almost all of it is centered in the US. For better or worse, that's where it seems to be centered. And it's not just, I mean, people always give the easy excuse. It's because you have more venture capital access in the US. That might be true, but I think that you got to step back and ask, why is it that if you look at the top 20 Indian companies, you don't see any young companies in that mix? One of my tests of whether a market and economy is in balance is whether you have companies across the life cycle at the top of the market cap table. I mean, let's take an example. You take the S&P 500, you take the top 25 companies. You take a company like Facebook. It's 14 years old. It's young by corporate standards. NVIDIA is 26 years old, but it's still young by corporate standards. There are a lot of young companies in there that essentially have blown out of small market caps to become large market caps. I can't think of a single other market in the world, not one. Maybe South Korea with the chip companies briefly, where you take the Sensex, try it in India, take the Sensex, go down the list. Look at chronological age, look at corporate age. The end game seems to be that you have to become a large, mature company to make it on that list. There's got to be something structurally in the US that allows these young companies to kind of break out and become the largest market cap companies. And I think until you fix that structural issue, India has the smarts to do it. They have the technology to do it. But the structural challenges that you face in making, I mean, you have lots of startups, right? But they tend to be startups like, you take Zomato, you take Paytm, you have startups that essentially rise to a certain point, but they never make it to the very top of the list, or they stay in a space. You need to find a structure that allows young companies to break out to the point that all of a sudden they're towards the top of the market cap table. And that might require structural changes, a willingness to forgive people who've made mistakes, to let them try again. I mean, that's one of the things about Silicon Valley is how many people are on their fifth or sixth company, and the previous tries have all been failures. Maybe there's something structurally that needs to change for those great AI, because there's nothing that requires, there's nothing US-based that cannot be replicated elsewhere.
A couple of quick follow-ups to that. For one, in the Indian context, have quick commerce companies and e-commerce companies that are attracting huge capital not been seen? Is that our answer to innovation?
It's not just India, right? 90% of what we've called innovation for the last 20 years is surface level innovation. By that, food delivery wasn't invented by technology. So Zomato is just taking an existing business and living off. I've argued with people that, these companies should turn over a third of their market cap to Apple and Samsung and Reliance Jio, because they're really smartphones plus the internet, and then they had a business on top that allows them to take an existing business and make it scale up. There's nothing innovative about this in terms of, hey, we're changing the way people live. So it's not just India, even in Silicon Valley, 90 to 95% of the startups in the last 20 years really haven't changed much other than breaking down existing businesses and making them more winner-take-all businesses. And I think that's So it is true, a lot of stuff. And that's why I said SpaceX is not just a technology company. It's not an app company. It's not a software company. The reason people are attracted to SpaceX, it does real things that are technologically at the cutting edge.
Aswath, you spoke earlier about the AI trade souring in some markets. Do you share some of the concerns investors seem to be having around how much AI can actually do versus what is being portrayed right now?
It'll happen. You should expect it to. I call it the big market delusion, which is anytime there's a big market, people will overreach. Why do they overreach? Because that's what human beings do. They think they can do things that cannot be done collectively. Thank God for that, because that's what leads to change. Every big, disruption, innovation in markets and economies has also been accompanied by a big market boom. And then there's a correction and a cleaning up, and you say, I wish I hadn't done that. But you know what? So what? It's good to have big market delusions driving people to overreach, because that's how you get change. In my classes, the question I ask is, do you want to live in a world run by actuaries? We'd still be in caves, because they'd be still assessing the risk and fire. You need people to overreach, but it also means that when people overreach, there will be a correction and a cleaning up. And as long as that cleanup doesn't spill over into the rest of society, why does it matter? I mean, why are you worried that people are putting their money in SpaceX at 2.2 trillion? It's not your money. So when people are, start complaining and wagging their finger about how speculative markets have become and how much people are paying for these young companies, my advice is mind your own business. Just go back and manage your own money. Don't worry about what other people do. Let them make their mistakes. And the only caveat I said is if their mistakes spill over into the rest of society. And that happens when they borrow too much to fund this architecture. Because then when they fail, it's not just they who are bearing the cost, it's the rest of us. So the part of AI architecture that I worry about is that component of AI architecture that's funded with debt. That's not the Mag 7. That's not NVIDIA. It's mostly small to mid-sized companies that are using borrowed money to build AI architecture. Those companies, when the reckoning comes, are going to take some of us down with them. And that's a part of AI that worries me. But the rest of AI, there's going to be a cleaning up. There's going to be a correction. There are people in some of these companies who are going to lose money. They've already done, right? Microsoft has done, 35-40% from its peak. But that's okay. That's part of investing. You take risks. Sometimes they pay off. Sometimes they don't. And it's not fair just taking a segment and say, look how much money I lost over the last 6 months if you invested 5 years ago.
The very real impact, though, of AI is on jobs, isn't it, Aswath? How do you see that panning out?
And that's really not even a market issue. It's a macro issue, right? The most optimistic stories about AI, the kinds of stories that lead you to put 10 trillion, 15 trillion, 20 trillion as market for AI are terrifying stories. For the AI market to be worth the 26 trillion, for instance, that you saw in the SpaceX prospectus, I would estimate that 1 out of every 2 white-collar workers would have to lose their jobs. Lawyers, consultants, bankers, journalists, where do they go? What are they going to do? And think of the income that leaves the economy when those people lose their jobs. Who's going to be buying all this stuff that your AI products and services deliver? So it is potentially catastrophic. You don't want the best case AI scenarios to play out, because while they may be great for AI companies, they're going to be catastrophic for the rest of us. At the other extreme, AI could just be a tool that allows us to become more productive, in which case it's a much smaller market. That's bad news for AI advocates, but it's good news for the rest of us. My guess is we'll fall somewhere in the middle there. We will have white-collar jobs lost in subsets of the economy, but it's not going to be as massive as the AI optimists think it's going to be. But it's not going to be as benign as the people who are blowing off AI saying nothing's going to happen. I'll continue to do what I'm doing today.
Aswath, we can go on speaking because you put things so succinctly, but thank you so much for your time, and we hope we have a conversation soon.
पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
For the first time on Indian TV, we have both Sandeep Kalra, Executive Director and CEO of Persistent Systems, and Manas Human, the co-founder and CEO and custodian of Nagarro, joining in to talk about this deal. Gentlemen, both of you, thanks so much for taking the time out. And Sandeep, I'll start with you first. Why pursue this large-scale, all-cash, cross-border acquisition now when Persistent by itself has delivered consistent organic growth? You yourself have said 24+ quarters of sequential revenue expansion. What specific gaps in Persistent's capabilities or market position does Nagarro fill that you couldn't have addressed it through smaller tuck-in acquisitions or on your own itself?
So first of all, Neeraj, thanks for having us. Both of us are very excited about this combination. Now let me lay out the strategic, reasons for this. This is not about growing in revenue or, basically scaling the thing out in a fast manner. If you look at it, there's so much complementarity about the two companies. This is more about strategically building a company built to last for next several years. Now, if you look at Persistent, last 7 years, from 2019 being a $481 million company to a 1.7 billion roughly is the journey. Now, as we have come through this journey, our landscape has changed. Our customer base has changed. The competition in that customer base has changed. The kind of deals that we fight today has changed. So if you look at it, yesterday we announced a 125 million ACV, annual contract value, 650 million total contract value deal in an environment where most companies are degrowing. And that cements our growth for the year, and we'll talk about it separately. But if I was to look at it, we started to become a challenger in our market several years back. Today, when we bid on larger deals, sometimes, we don't have a seat to the table or right to win because we are not truly global in our existence today. We are Our revenues are 82% North America, 8% in Europe, which is a very important constituent for a number of our customers. We don't have a presence in Middle East. Nagarro complements that absolutely impeccably. Nagarro is very well positioned, very well respected brand name in Europe. They have a very good presence in Middle East. They have a good burgeoning presence in Japan. From a geography perspective, from a capability perspective, sometimes we don't have the seat to the table because we don't have a ERP practice. They have an impeccable ERP practice. They have a direct relationship with SAP where they do very good work for SAP in terms of product development, and I'll let Manas talk about it. They also have a very good implementation practice on SAP, which is fairly good addition to us. If you look at other things, they have verticals like industrial and automotive put together is a fairly good vertical for them, growing very well for them. They have verticals like consumer, like public sector. We don't have any presence in these verticals. Their presence in the tech vertical and in the financial services bolsters our size, scale, geographical spread, capabilities. To give you the net of this, from being 82% US, 8.5% Europe, the combined entity now becomes 65% US, 22% in Europe, very well balanced, geographically diversified, vertical diversified, very good rich set of service lines. And now, even from a customer perspective, if a customer looks at us, they can look at as a very credible competition. And now on top of it, layer the AI capabilities. We are very good in engineering. We are very good on the data side, preparing enterprises for AI readiness. They have very good accelerators and capabilities on the domain side and so on, in addition to their own capabilities in engineering and data. So the combination is both from a forward-looking perspective and here and now, a very, remarkable and something that we would have taken many, many decades to build. So I'll stop there. That's the reason why we decided to go with Nagarro. And we are very convinced we can scale it nicely together.
Okay. Manas, if all goes well, you will be a circa $3 billion entity combined. Where do you go from there?
So let me start with the second part of it. I think qualitatively, I leave the quantitative part to Sandeep, who's more quantitative than I am. But qualitatively, we want to build one of the world's leading intelligence transformation companies. I think, we talk IT, which is information technology, which is really old language. We had digital engineering and now but intelligence transformation. I personally believe that this is a burgeoning wave and you have to prepare yourself for that wave, right? And it's going to be disruptive to some players. It's going to be additive to some players. We want to end up with the seat at the top table at great clients all around the world in this AI transformation. So that's what we have been trying to do internally. What we really loved about Persistent is that they've gone through a somewhat similar evolution. They've gone from being a very techie company, which was well respected, like we are, but to also with Sandeep in particular, bringing this sort of sales and commercial savviness. We have been very, very different from that. We have not had a CFO till last month or 2 months ago, trying to build a very decentralized structure and so on. So there's a lot of margin room, I believe. There's growth room in terms of all the complementarity of the different regions and verticals and practices and so on. But also there is, I think, a growth room just in terms of learning all this stuff. Large deals, for example. It's something that we in our daily work, we've managed to build accounts. In every account, we have very good standing. But even to build accounts is relatively new for us. But to build large deals, we just don't do them. So we have a list of very marquee clients where this sort of capability can just accelerate growth. And that's the whole premise, for us. Part of it is, maybe the stock market in Germany or Europe is not maybe the best place for IT services. There's one structural thing that we have been thinking of solving for. But when we met and we were looking at this, it just seemed almost too good to be true. The complementarities and the fact that they're two similar companies at heart, right? So that's where we are excited about this.
Sandeep, I have, of course, questions to ask you about the valuations, etc. But before that, just your vision. When you've done this, you become a $3 billion entity. Where do you go from there?
Yeah, so let me go reverse gear. First, the 50% plus one with Manas, Vikram, who are the co-founders, their support, and the support from the largest shareholder. We are confident that will happen. So that one, I want to take off the table. Obviously, it's not done till it is done. That has to go through whatever process. Then comes the regulatory approvals. That also should be done in the next 4 to 6 months. We should be done with that. Now, as soon as that is done, and we have said we'll run the companies independently into public markets, but we will figure out a way in the legal way to make sure that there is synergies that we can bring together, and there is processes that we can bring to each other while we remain independent at some level. So there is synergies that we will start driving, and then as soon as we think it is the right time to do, 2 years or more or less, we'll figure it out to work together, and then comes the other part. Now, as far as the two companies working together, we are saying this is the Persistent-Nagarro group. Both the brands have very good brand reputation in both the markets. Nagarro, in one place, if I can say, their customer satisfaction is even better than us in the ISG ratings. So we are all kind of convinced brands exist, the group exists, and now from a growth perspective, look, we are growing today at 16.5%, 17%. We have grown very well for the last several years. Our hope is, and our large deals support the growth momentum for quarters to come. If we can bring the same rigor as some of that to get quick wins in Nagarro over the next several quarters, we are confident of combined growing the company at a reasonable level from an aspiration perspective. This is not a guidance, nothing on those lines. But if we are able to grow the way we are saying, first milestone for us would be, we said as Persistent, we want to be $5 billion by 2031. As Persistent-Nagarro group, that journey becomes easier. If you do the maths, $2.9 billion right now, we have enough and more time to go there. And more than the revenue part, I would say this, our task is to build an absolute unparalleled company for the next generation. Something that is built to last for next several decades. What was built as Persistent for 36 years, what was built as Nagarro for 30 years, will last far more. That is the way we are looking at it.
Okay. Sandeep, now the stickler question, right? The belief amongst people who think that the valuation is steep, but even if you argue that the valuation overall that you've paid is fine, the transaction is likely to lower the growth profile of Persistent while imparting integration risk to the business as well, because Nagarro clocked in 5% CAGR in the last 3 years with 3% growth guidance, but you've done much better. So the acquisition will bring down the growth profile from the current 15-80% US revenue growth, and it's a competitive scenario. How do you respond to all of these?
It will be a journey. I'm not saying that the next quarter things will change and become hunky-dory to the combined growth rate being better than Persistent standalone. Even Persistent standalone is a lot of effort. And thankfully our deals and our pipeline supports our growth rate, and that is, we have already announced the deal when that should support this year any which ways. Now, from a longer term perspective, once we have the regulatory things done and we can work together, from what we have seen, look, there are 2-3 data points. Number one, there is hardly any overlap between the customer base. There is single digit overlap in the customer base. That is very, very heartening for us. Number two, the customer concentration in terms of revenue concentration in customers is low in Nagarro. And that is one thing that we would want to see. Their logos are impeccable. So if I can say one thing, I don't think I or the management team in Persistent could have got those logos in the next several years, even if we tried our best. The kind of logos that we have seen are impeccable. And they have the propensity to spend huge amount of money if we do the things right in terms of client mining, right capabilities and so on. So from that perspective, look at Persistent's journey. Look at our own journey over the last several years. How we have scaled the accounts, how we have scaled the overall revenues. We are confident. The good part is we see in Manas, Vikram and the management team and the layer below, people who have not invented year syndrome. So and they are willing to work with us and we are willing to work with them. So through the diligence, we have figured that out and we are confident this can be a pretty strong growth story. I don't want to say more than that.
Okay, so pretty good growth story. Let's assume that is given. What about margins though? Because the margins of Nagarro versus Persistent are lower, and the lower revenue growth recency of Nagarro versus Persistent, could that be a stickler?
No. So the short answer is margins are easier to achieve. Margins will not be the problem here. And growth also will not be the problem. It is just a question of getting the regulatory approvals and getting to work.
Okay.
From what we have seen, there is enough and more.
I really believe that. See, one of our strategies, and you may think it's a counterintuitive, but that's probably what strategy is. It has to be a bit counterintuitive. Was that we wanted to embrace the world, right? So we went into many verticals and many different parts of the world and so on. And so we are subscale. We say internally, we say it all the time, we're subscale. And I think these guys are actually going to, let us use and leverage some of those investments that we make in practices, etc., which I think is much higher than industry average. That's what our consultants tell us, right? So it's a bit matter of sort of giving that scalability to those investments, right? So that's the thesis.
Yeah. And we have done our diligence, and whatever we say has a good basis for that. And we'll let the time play out, but we are confident. We'll work together well, we'll integrate well, we'll bring revenue and cost synergies both. But more important than that, cost is not something that I'm too worried about. The revenue synergies playing out and some basic discipline and some places where we are subscale. Today we are very subscale in Europe. They're at scale. Similarly, they're trying to open certain geographies where we are at scale. There's enough and more to be done. And we are confident we'll deliver the persistent Nagarro of tomorrow equal to what persistent today is, or what Nagarro today is, or better.
Sandeep, how does this deal change Persistent's capital allocation priorities over the next 3 to 5 years? Dividends, buybacks, further M&A? What if there is a good deal or offer and you can't take it up because your money is locked here?
Too early to say, but at a high level, I can say this. This is a discussion with the board. I'll not comment on many things, but at a high level, the first job is to make sure what we are doing right now is successful. I will rule out any significant M&A for at least the next 2 to 3 years. Will there be sometimes, we land up doing tuck-in acquisitions because we are doing vendor consolidation, and the customer may say, as a part of this vendor consolidation, can you please consolidate this vendor? Or we may come across one small tuck-in which may make us sharper, brighter. But from any meaningful M&A, I can tell you, we are not going to look at anything else. We have our job cut out. We have enough and more to do. And even if we were to not open one more account, whatever accounts we have, and just do justice to it, we will lead the growth in the industry. So we have our job cut out for that.
Well, wish both of you and the Persistent Nagarro Group good luck for the future. Thanks so much for taking the time out and being with us.
Well, Rishi Anand, MD and CEO, Adhar Housing Finance. Give us a sense of how Q1 is going. I know you can't give us all of the details, Mr. Anand. Great to have you on the show. Has Q1 kept up its momentum among fears of what's going to happen to interest rates, overall geopolitical concerns, inflation concerns trickling down through the economy?
It was so nice to hear about the Kotak report early in the morning. Yes, I would say, while I can't give you a lot of numbers on Q1, but in terms of expectations of growth, the guidance that we've given, I think we are standing up to it. Numbers are looking good. Retractions are looking good. West Asia crisis, I would take it with a pinch of salt because the impact has not been seen at the consumer segment that we deal with. We actually deal with the lowest segment of the society. And we call ourselves, all of us, the names that you've been taking, we call ourselves low-income housing finance companies. So we have not seen the real impact happening on the ground. As I always say, the first line of defense for us is the change in the bounce rates, which have been stable for the last 8 quarters. So no real impact of the West Asia crisis. But yes, the numbers are looking strong and good.
Having said that, Mr. Anand, there has been a sort of slow down or a slowing of uptake in this low-income housing finance category, as you've described it. Do you think that's now bottomed out?
Tamanna, I would slightly beg to differ. Look at the numbers of the top 3 or 4 players in the low-income space. Everybody's growing last 3 years at about CAGR of about 20% plus. That gives a clear indication that there has been no slowdown. Yes, we've been hearing of various reports where we're talking about the industry's talking about slowdown on the supply side with respect to I would say affordable housing supply. But that is to be taken with a pinch of salt, and I'll try and explain why. If I look at my portfolio, 35% of my consumers do something called self-construction. They have their own land and they construct properties on it. Now, this is data that is not captured in these industry reports. Another 35% of my consumers do something called secondary sale. It is hardly captured there. And about 27% of my consumers do take loan against property. So I would say broadly, a big segment of our consumers are not captured in these industry reports. So I will take it with a pinch of salt. But if you look at the numbers of the key players in the segment we operate, they've been growing steadily at about 20% plus.
Mr. Anand, Neeraj here. You ended FY26 on a really strong footing, right? I believe it was the largest disbursements in a single quarter for you. You crossed some critical marks, etc. Do you reckon that the pace and the momentum could well continue for FY27 as a year? And did Q1 show signs of that? You may not be in a position to give me exact numbers because you might be in a silent period. I just want the color.
That's right, Neeraj. Thank you so much. Yes, we ended the year with a big milestone of 31,500 crores with a ticket size of 10.5 lakhs. We're about 3.5 lakh consumers, 626 branches, 22 states. So yes, we ended the year on a high. If I look at the momentum, and you're right, we are on a silent period. I can't be sharing a lot of numbers. The momentum from a perspective of growth numbers, guidance numbers, we are dot on target. We are better off than what the last year could have been.
This 20% which you gave out at the end of the year on the con call, right? If I'm not wrong, AUM 20%, profit growth 20%, 17 to 18% disbursement growth. You are saying you are on track for that. Now, that's good, but maybe you can also call it's modest. Do you reckon this is the run rate that you envisage for the next few years, or is it difficult to call that right now?
So Neeraj, the way I look at our business is, from a medium-term perspective, 20% AUM growth is what we are looking at. I have called out in various forums that we are looking at a 50,000 crore book by the end of 3 years from now, which is if you by simple maths, a 20% growth is required for that. From there on, when we become a large balance sheet, when we cross the 50,000 crore milestone, that's when we will have to recalibrate and see the opportunities. We will have to look at maybe an 18-19 kind of % of AUM growth. But the confidence level for the next 3 years till the time we reach 50,000 crores is a 20% AUM growth.
I'm wondering if the pace of construction of homes in that category is keeping up. And I know you spoke about how a large cohort of your customers are those who construct themselves. Those costs have also gone up massively, especially in the last few months because of geopolitical issues, etc. Just the construction cost has gone up. Cost of all those elements have gone up. Have you seen that impact spill over in increase in loan size ticket?
Yes, you're right, Tamanna. Meaning, if I were to take this discussion little on the past, I think the cost of construction actually started rising post-COVID. It is not that the West Asia crisis has given a little bump on the cost of construction. It actually went off post-COVID and across states. Primarily in the metro locations and then trickling down to even the tier 4, tier 5. Yes, and you're right. That directly shows an impact on our ticket size. A gentleman who would have constructed a 2-room house pre-COVID with a 7-8 lakh rupee loan today wants a 10-11 lakh rupee loan, and that is at the book level also you see on an incremental basis my average ticket size has jumped to about 13 lakhs, while on the book I am 10.5 lakhs. And that's where I say you are right. Cost of construction has actually gone up. But has that impacted the momentum of construction activity? If that's where we are heading to the question, no, I would say it has not. My number stats are clear that still about 32-33% of the consumers are doing self-construction, which is primarily in tier 4, tier 5 locations.
Anand, any opportunities in West Bengal after that regime change here? Because I see a lot of announcements around infrastructure projects. Are you sensing higher growth in that region?
Neeraj, I think you've touched the topic. We are all very hopeful. In fact, we are the only low-income housing finance company which is available with about 13 branches in West Bengal. Very hopeful with whatever is happening in West Bengal. We have already, bumped up the teams. We are looking at numbers very carefully. We are looking at various, government decisions very carefully. And just as another data point, West Bengal in terms of low-income housing demand stands second largest in the country. So by demand, I think there are no questions around whether West Bengal should give the outcome that we all are expecting. It was all the situation in the past, but I think bygones are bygones. We are all looking at it very favorably.
Got it. Okay, Mr. Anand, we're wishing you all the best for that and more. Thank you so much for taking the time. I look forward to talking to you post your results, sir.
Thank you, Neeraj. Thank you, Tamanna.
get in Ashwini Agarwal, founder of Demeter Advisors, on the show. Ashwini, great having you as always. Thanks for taking the time out. Is your smile telling me that you're constructive on the markets because oil has cooled off, the conflict seems to be nearing an end potentially, so the macros have improved a bit? Or is it that it is still unclear as to what to do?
No, I am a little bit constructive for all the reasons that you mentioned. Historically, at least, stabilization of the rupee has been a predictor of FII inflows, FPI inflows. And to that extent, I think maybe not now, but once the FCNRB deposits have gathered some momentum and the rupee looks to kind of be stable, then I think, you should see that event playing out in the sense that FPI portfolios inflows turning positive, which should be positive news for Nifty and the large caps, because large caps have significantly underperformed the small caps over the last 3 months. Such a wide performance divergence is not usually observed. So to that extent, I think, you have some room for the large caps to move up. I just hope the Iran-US, kind of dance doesn't get messed up. We continue to see a lot of mixed news out of the Middle East, and I think that's concerning. But I'm hoping for the best there.
You know, the strange thing about the Iran-US dance, as you call it, it seems to pick up pace only on the weekends when markets are shut in the US, and then by Monday morning, they go in for a pause. But having said that, for India and for Indian equity investors, what becomes the biggest factor now as that threat recedes? Is it the spillover effect of the inflationary impact that we saw in the first quarter?
So, Tamanna, my sense is that there are a bunch of things that, Indian investors have to think about. One is, how does the earnings season pan out? Earnings season is very difficult to predict this time around because there are going to be a bunch of inventory gains and inventory losses. A lot of it we will not be able to foresee. Second is that the rains are playing truant. Historically, again, GDP growth, agricultural output hasn't had a significant impact of late on overall growth from poor monsoons, but I think consumer demand may slow down a little bit, and that's something that we have to watch for. So those are the two issues which, will probably determine investor sentiment. Mind you, the earnings momentum, if you think about it, if you take fiscal 26 in perspective, first quarter was the weakest, followed by gradual strengthening across the quarters, with fourth quarter being pretty decent on earnings. I think that narrative may get a little bit challenged in the short run. And what I've seen is that retail investors or domestic investors are very sensitive to quarterly earnings. That's not my preferred way of looking at things or investing, but be that as it may, one has to recognize that fact. And that, to me, could be a bit of a hiccup, especially on the broader market where you see a lot of sort of hard to predict variables coming into play for the first quarter earnings. My sense, though, is that over the next 2 years, you are looking at a scenario which is a little bit positive, because I don't think there are any macroeconomic imbalances. The worst of the rupee is behind us. Investment seems to be picking up. Domestic demand seems to be picking up. Credit growth is signaling positive cues. Valuations are not very attractive, but they're not very expensive either. So I'm hoping that we'll muddle along with kind of low teens to mid-teens type of returns.
Okay. Ashwini, what about the auto pack? I think the Delhi EV policy may be throwing a spanner in the wheels of the ICE plans, but a lot of notes currently talking about very bottom-up ideation within autos. So Maruti gets an upgrade despite the fact that it does not have as large an EV portfolio, if you will. But M&M also gets an upgrade because EV penetration is going up. And then there are two-wheelers, etc. How do you kind of separate the wheat from the chaff here?
So, Neeraj, I think, like you said, it's very bottom-up. While EV is obviously gaining traction, it is not a one-stop solution. I continue to believe that even 5 years from now, there will be a significant number of gasoline or diesel vehicles on the road. As a vehicle owner, unless the charging infrastructure becomes ubiquitous, especially with public access, it's not possible to rely completely on electricity, barring for intra-city runs and short runs. So my sense is that automobile is more about consumer demand, and consumer will choose between petrol and EV, depending upon their circumstances, how much do they drive, what is the charging infrastructure available to them, and so on and so forth. So, well, the Delhi policy, I did read about it, is probably there for the kind of pollution Delhi faces. I don't think that's going to be true for the rest of India. So I think it's going to be very bottom up. People who are winning market share, people whose sales momentum is continuing to be strong, I think those stocks will do well.
Okay, thank you so much, Ashwini, for speaking with us.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hello and welcome to The Big Question. I'm Vikram Oza. Now Delhi has just hit that accelerator on its EV ambitions, which is why we're raising that big question. The capital has cleared that EV policy of 2026, and it's backed by a proposed 15,000 crore rupee investment, which is spread over the next 4 years. So there is a massive charging infrastructure rollout. There are vehicle purchase incentives being rolled out. There are scrappage benefits as well, and also there are tax waivers. So all of this part of the kind of policy that has been rolled out by the Delhi government. And this is all happening while they're setting firm deadlines for the transition, which is moving away from the fossil fuels, from petrol, from CNG vehicles, all in key segments. The targets are set. So from January 2027, only electric three-wheelers are going to be registered. And then from April 2028, new two-wheeler registrations are going to effectively go all electric. These are the timelines we are working with. So from auto rickshaws and commercial fleets to the delivery vehicles and the two-wheelers, Delhi is making it clear that this is mobility future. electric is the way to go. The policy is aiming to support as many as 30,000 public and semi-public charging points by the year 2030. That is again another target. So it's offering incentives of all kinds of up to 1 lakh rupees on certain commercial EVs, and significantly, it backs pure EVs while keeping the hybrids out of the incentive framework. So not hybrids, not the transition kind of technology. They're favoring direct EV. Now, nobody disputes the need for cleaner air. Delhi needs it. These are the kind of pictures that emerge every winter. But the question is, can ambition be matched by execution? Can charging infrastructure, can electricity networks and the financing scale, all of these, can they be put up quickly enough? And will consumers, the gig workers, the small businesses, will they all be able to make the switch without feeling financial strain? And very importantly, are these incentives enough to change behavior, or is affordability still going to be the biggest hurdle? The world's most successful clean mobility transitions have shown that the bold targets do matter, but so do infrastructure and affordability and execution, which is why we're asking this question. Is Delhi now moving and ensuring there is a blueprint for the entire country to follow, or are they moving too fast and too quickly for the entire rollout of the infrastructure to keep pace? Let's take that across to our panel, and joining us on this discussion today, we've got Anumita Roy Chaudhary, Executive Director at the Center for Science and Environment. Good to have you. With her is Saharsh Damani, Chief Executive Officer at the Federation of Automobile Dealers Association, that's FADA as we know it. Sharif Kamar is also with us. He's a Fellow and Associate Director at the Energy and Resources Institute, that's TERI. And Palak Popli is here, Whole-time Director at Victory Electric Vehicles India Limited. So, ladies and gentlemen, thank you for joining us on The Big Question, and please feel free to disagree and agree with your co-panelists as well. Whenever you want to make a point, just raise your hand. I'll come to you ASAP. But Anumita, Delhi already has some of the worst air quality. I was just showing some of those visuals, the worst in the world. So is this kind of bold intervention, the kind of aggression that the Delhi government is showing in meeting these targets, is it what the clean air crisis in Delhi demands? Because the other argument is that even good environmental goals can risk failure if the timelines get ahead of real implementation on the ground.
Absolutely, Vikram, because what we really need to keep in mind that given the air pollution crisis right now, and knowing that the vehicles are the top contributor to air pollution in Delhi today, the next big transition has to be about zero emission transition. Delhi has done everything, CNG, getting rid of old vehicles, BS6 emission standards with ICE vehicles, but we have not met the benchmark. So now the next level has to be about zero emission. But now coming to your specific question, that you can have a clean air target, but to meet that ambition, is the business prepared? And whether there is any reason for pessimism around that. And I would say no. Because, for instance, what our experience has been, and where this new policy is different from the old one, clearly shows that only incentive-driven program doesn't help. Despite having 25% target and incentive in the 0-1 policy, we have only reached about 12% electrification. But in the next policy, what is important, we are combining incentive with a regulatory target, given absolute certainty to the market about that where the goalposts are, and that is needed to build industry confidence for investment. And we have seen this happening in the past with the CNG vehicle. The mandate for complete 100% target for CNG transition in 3 years was given when not a single CNG vehicle was produced in this country. And yet we admit that the moment the directive and the mandate was absolutely clear. And today we know the preparedness for electrification is much better. If you see today that the electrification of the production line of different OEMs that have already happened, the investments that is taking shape in the infrastructure of charging and battery development, what we now need as a next step is to create firm, committed demand in the market to ensure that that investment becomes viable and we can deliver on the target. Today, what awaits is the industry's firm policy, long-term certainty that yes, we are not going to deviate from the trend, and that's why I'm so glad that these loopholes.
So you're very happy. You sound very happy that this policy is as aggressive as it is. This is what Delhi requires. Cleaner air is the need of the hour. Zero emissions is where it's at, and unless you have this kind of clarity, these kind of tough deadlines, we will not do it. Saharsh Damani, do you agree? From a dealer perspective, from a consumer outlook as well, is the market genuinely ready for a future where only electric three-wheelers are going to be registered from 2027 and only electric two-wheelers from 2028? Are we ready for that? Saharsh? Perhaps you need to unmute yourself, Saharsh.
Yeah, thank you and good evening to all my co-panelists and to you and all the viewers. Yes, I believe the market is moving in the right direction, and this policy will further accelerate that transition. From a consumer's perspective, because we are close to the dealers, acceptance of EV has been improving steadily because people are now looking beyond the purchase price and evaluating the total cost of ownership. Lower running costs, lower maintenance, and the incentives announced under this policy certainly makes EVs more attractive. Having said that, consumer readiness alone is not enough because the entire ecosystem readiness is equally important. Delhi retails nearly 50,000 two-wheelers and around 5,000 three-wheelers every month. Today, India sells around 1.7 lakh electric two-wheelers and about 70,000 electric three-wheelers every month. Now, what does this mean? This means that Delhi alone could eventually require close to 30% of today's national electric two-wheeler volume and around 10% of the electric three-wheelers volume. These numbers clearly indicate that the scale of preparation that will be required from manufacturers, is a steep task from the current numbers what we are seeing. The policy has given the industry a clear demand signal.
Yes.
We now expect that OEMs should respond by ramping up production, expanding product choices, and ensuring that adequate allocation is there for the Delhi market alone. At the same time, charging infrastructure, financing, and after-sales support, must keep pace with the current demand what we are generating.
Can they or not? Let me ask the industry perspective from Palak. Palak, you belong to the EV industry. For the industry, are the kind of deadlines that are being mentioned over here, do you think, for one, it creates the demand certainty, like Saharsh is pointing out, and that's something the industry has always wanted?
Absolutely. The EV market has almost 60% three-wheelers penetration. 8% of penetration is there in the EV market, and it has drastically increased. Yes, there is a certainty in demands for EVs, and the industry is ready to cater the demand also. We have OEMs who are focusing on after-sales services and the demand, capturing new models, capturing new markets. And it is rightly said that as we approach to the policy, Delhi is the right place for the policy. But yes, the charging infrastructure also matters.
But
currently,
No, but how big is the risk over here, Palak, that supply chains, battery availability, production capacities, will they struggle to keep pace with demand as these deadlines drop upon us?
No, I don't think the market will struggle. We already have a lot of OEMs and manufacturers, and the manufacturers and the investors looking at the industry and looking at the growth. They're already ready. They already have plans in action. So there must not be a constraint in terms of demand when we talk about the products.
Fair enough. But Sharif, do you agree? The policy setting out this 15,000 crore rupee push, it's a massive charging network expansion that is required. But how big is the charging infrastructure as a challenge today? When customers walk into showrooms, is their biggest concern going to be the price, the resale value, the range anxiety, or is it indeed the charging? Which one affects their buying decision the most?
So Vikram, thank you so much for having me and Terry on the panel. And I must congratulate that we are talking about air pollution because of the EV policy that has come and not during October-November season when the pollution is at the peak level.
Yes.
So I must congratulate on that front. Now, coming to the charging infrastructure, of course, the industry would be ready in terms of the vehicles and the volume that is required for Delhi. But I think charging infrastructure would be the most critical aspect if you look at from the success point of view to implement such policies. And therefore, if currently Delhi has about 10,000 odd charging points, of which 3,000 charging points were built in the past 1 year or so. So I think clearly, and the target under the policy is about 32,000 charging points. Now, there is a clear, roadmap for the different departments, transport as well as power departments, to come together and set up that basic infrastructure that is required for the success of this EV policy, which is a very, I would say, one of the boldest EV policies in the entire history of EV in India. And that's where the hook lies in terms of, and the success lies in terms of implementing the charging infrastructure at this point.
Yeah.
That is a challenge, but I think the Delhi departments and the Delhi government and different stakeholders will come together to make it a big success.
So whether it's strengthening the electricity grid or looking at the local distribution networks, the renewable power integration, a lot of work will need to be put in. Where do you think the maximum push needs to come, Sharif?
I think one of the key aspects is to look at the siting of these charging infrastructure where it is required most. Currently, if you look at the fleet electrification that is happening in the city,
yes,
a lot of public charging infrastructure is being used primarily by the fleet operators, the taxis, taxi service, and less by the private sector and private individuals. So I think fleet level charging infrastructure and mass charging infrastructure would be required, and the siting would be the most critical aspect. We should have, and we should plan for megawatt chargers, bulk chargers, charging points across Delhi, so that the EV fleet operators are catered to, as well as leaving some space for private charging, space as well. The other aspect that we, keep missing is the swapping infrastructure.
Yes.
I think at the same time, particularly for two-wheelers and three-wheelers, we need to have these swapping charging points across the city, make it, omnipresent in terms of wherever the demand is. And therefore, in both these aspects, fixed charging as well as swapping, the siting would be the more important factor.
Palak, you agree with that? The swapping infrastructure needs to be put in place immediately too?
Absolutely, sir. The swapping infrastructure needs to be put in place. But when we talk about three-wheelers can be charged at home also. And the current three-wheelers that we have, they have a good range to sustain for a day. So the driver can easily drive in a day. And for the two-wheelers and gig workers, we would definitely need swapping infrastructure right away for the fleet operations.
But Palak, EV makers, they say that the total cost of ownership when it comes to EV vehicles is lower. But many consumers, they still focus on the upfront cost. That hasn't changed. So how do you bridge that gap and make the EV proposition compelling enough for middle-class buyers if affordability is really going to be where adoption is really going to come from?
So there are different variants. Like being in the industry, I have seen a lot of OEMs, and they almost now, looking at the customer demand and the customer reluctance, they've come up with a lot of variants. They now come up from economy to premium models. So looking at the customer's reluctance to the price and price sensitivity, they've come up with different variants which offer different price segments. And they have a segment that caters middle class also, and they have a segment that has premium models which come to people who want to go for premium models only in the industry.
So if they are going to have those kind of options in the market, it makes their affordability kind of parameter easier to tide. But Anumita, why do you think the government has chosen the pure EVs over the hybrids? Some would say the government should not ignore what is a useful bridge, a transition technology that hybrids offer that consumers may perhaps buy into more readily.
First of all, Vikram, it is very important to bust the myth that hybrid is a transition bridge to electrification. It's not. Look very carefully at the strong hybrids that we sell in India today. What is it? It is still a 45-liter petrol tank. You are burning that much fuel. You have a battery size which is smaller than that of a two-wheeler. It only assists with electric drive only for a very short and a very minimal time of your total driving. Hybrid is a technology to improve fuel economy of an internal combustion engine. It is not an electric vehicle. So what we have to keep in mind that at a time when we have to give very firm signal to the industry to invest in electrification, you cannot deviate and detract and weaken that roadmap by giving away SOPs to the intermediate technologies like hybrid. Therefore, I'm so happy, therefore, that this policy is therefore so categorical and has said no to any intermediate strategy.
So no to any intermediate technology. Saharsh Damani, are you in agreement? The industry's view is often that strong policy signals accelerate the innovation, accelerate the push, to be able to accelerate the kind of EVs that we need right now to be able to control pollution levels in Delhi. So if Delhi had continued supporting the hybrids, would that have slowed investment into pure electric technologies? Do you think that would happen?
Interesting question. In fact, the draft EV policy which had come out had hybrids in it. But as per yesterday's press conference, we are seeing that hybrids have been taken out of this. I think the larger objective here is cleaner air. And on that, there is complete alignment. In fact, today, right now, while we are having this interview, it's 500 AQI in Delhi.
Yes.
So Delhi's direction towards lower emission mobility is absolutely the right one. The question is not EV versus hybrid. The question is how quickly we can reduce emissions while ensuring a smooth consumer transition. And strong policy signals certainly encourage investments. When the government lays down a clear roadmap, manufacturers gain confidence to invest in a certain product, production capacities, and also the localization of that product. So from that perspective, policy certainty is always positive that way. Having said that, the market also needs adequate consumer choice during the transition. Different technologies play different roles depending on consumer usage patterns. Ultimately, the market will decide which technology succeeds. But our immediate priority should be ensuring that enough electric vehicles are available to meet the demand this policy will create. That is the biggest challenge what we have right now, which we have to solve for. Delhi alone, as I said, retails 50,000 two-wheelers and 30% of the total numbers will have to come to Delhi. So that is the big challenge what we as the dealers fraternity are looking at. Will the OEMs be able to manufacture this volume of vehicles? And second, will they be able to allocate such a big volume to the Delhi market alone? So these are the questions what we have in mind. Because a lot of dots have to connect and we have to align all our stars together so that this policy becomes a success and becomes one of those policies which is then implemented across the nation.
So yes, exactly. So whether or not this can become a blueprint for the rest of the nation is largely going to depend on how the ordinary person on the street can look at making that transition into electric very easily. So the people who depend on mobility for their livelihood, we're talking about auto drivers, delivery partners, the small transport operators. Are they being asked to bear too much of this transition risk, you'd say, Saharsh?
I think it is not a transition risk because the kind of policy incentives which are coming into play, registration fees getting waived off, road tax getting waived off, the scrappage benefits being passed on to the customers. And then there are a lot of manufacturers which are already running the BaaS model, battery as a service, because in electric vehicle, 40 to 45% of the cost of the entire vehicle has been borne by a lithium-ion battery. So if that also becomes as a service, then barely what you pay as a customer is around 60 to 65% of the vehicle cost, which then makes it quite economical from an upright purchase point of view. The down payment comes down, which becomes a big comforting area for a customer in the two-wheeler or in the three-wheeler space. And as manufacturing of these products ramp up, we will see economies of scale also coming into play. And first, it will become comparable to an ICE product. And then it also may, be available at a discount compared to an ICE vehicle. So I think on a long-term basis, it will only benefit not only the citizens of Delhi, but also customers because of the economies of scale coming into play and the kind of running cost which benefits EV buyer.
Are you in agreement, Sharif? If you're truly looking for mass adoption, then I'm wondering if manufacturers and financiers and governments should jointly create innovative models like the battery leasing, like the subscription ownership, like the low-cost financing, the battery swapping infrastructure. All of that is going to be required, don't you think?
So, Vikram, absolutely right. I think our Indian industry, it is very innovative and it accepts the challenge, whatever the government and regulators throw at them. We have seen the transition from diesel to CNG, and that's where we want to see, in terms of EV transition as well. And we will definitely look at this as a positive challenge for the industrial growth as well as for the air quality, better air quality. And that's where I think there is a huge opportunity there. Let's look at that. The glass is half full and not half empty. And with the EV policy, I think the job is half done. We also need to look at other strategies to reduce air pollution from the transport sector, be it phasing out of old vehicles. But I think overall, the industry is equipped. It is sufficiently equipped in terms of providing the volume that is required in all segments, I would say.
Yes.
I'll give you one example from my recent conversation with an EV fleet operator and a driver. He was running about 400 kilometers per day with an EV vehicle, as compared to about 250 to 300 kilometers per day. I think the income opportunity and the generation that will happen through EV will also have a positive impact on the livelihood of the people as well.
No doubt about that. Anumita, then how are we going to measure success of this policy? If it has to become the blueprint for India, then are we going to measure the success by the kind of sales numbers that EVs hit? Or should the ultimate metric be cleaner air and lower emissions and better public health outcomes? How are we going to judge the success of this policy?
The metrics for judging success, one, certainly to see the scale of the market building up across all vehicle segments, just not the smaller vehicles, small format vehicles, but also the cars, the commercial vehicles, trucks and buses. So that will be clearly the year-on-year the tracking that we need to do. And then, of course, its ultimate outcome will be how we are therefore eliminating the tailpipe emission in the city and its contribution to overall air quality. That's what we are all waiting for to breathe in this city. Correct. So this emission transition is really the way forward for us.
In that case, Sharif, if Delhi succeeds, you think it's going to become the template for Mumbai or Bengaluru or Chennai, other major cities, or you think Delhi is quite a unique case? The pollution problem over there, it's not like AQI is low in Mumbai, but I'm just saying Delhi has a uniqueness about it that cannot easily be replicated elsewhere. Where do you stand on that?
Absolutely, Vikram. I think we don't have to go far to Mumbai or Chennai. I think from air pollution, of course, we can. But we need to also deal with our Indo-Gangetic Plain states, which includes Punjab, Haryana, Uttar Pradesh, Bihar, West Bengal as well. I think all these states that I mentioned are affected by air pollution, and majority of it coming from the transport sector. And therefore, Delhi EV policy gives a direction to all these states as well, not only the individual cities that you mentioned.
Yes, indeed. So, I mean, there is no taking away from the fact the strength of this policy is going to determine on how exactly we are able to kind of bring all of these factors into play and volumes, whether you're talking about the infrastructure, whether it's a vehicle front, the entire OEM part of the industry, all of them will have to fire on all cylinders, so to speak. But what emerges from this debate is that the destination is not really in dispute. We are looking for cleaner air, cleaner mobility, a more sustainable city. That's the aim. Now, the real question is whether Delhi can make the journey affordable, practical, inclusive enough for people to come along willingly. I want to thank my panelists for great insights. Anumita Roy Chaudhary, Saharsh Damani, Sharif Kamar, Palak Popley, thank you for joining us with your views on this. Of course, we'll keep circling back and seeing how quickly this policy is adopted. Its success is not going to be monitored on a day-to-day basis, but overall, you can talk about the policy having its effect in the long run only when you kind of see cleaner air to breathe. And when you are able to breathe in a city like Delhi or Mumbai, it's going to be a boon. It's a policy that is going to be aggressive, but how quickly we can adopt it, making those targets, is going to be something that's on our radar. I'm Vikram Oza with a big question. Thank you for joining us.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome back to NDTV Profit. You're watching Market Express. My name is Puneet Zaveri. Let's get straight into the show. Markets stay choppy in trade. Nifty ends near the day's low, below the 23,900 mark. The Sensex is also down by over 250 points, while Maruti Suzuki and Titan top the gainers in terms of the Nifty 50. Eicher Motors continue to be down and out in today's trade, led by the Delhi EV policy. Tata Consumers also lags behind, while the broader markets outperform the benchmarks. IT, banks, metal and FMCG were the top sectoral drags for the day, with the tech index falling by over 2.5%, while defense, realty and pharma were among the top gaining sectors. Shilpa Medicare jumped by over 5% today after the company's wholly owned subsidiary Shilpa Biologicals entered into a co-development and supply agreement with the Finland-based Orion Corporation. Now the agreement has been inked for the company and co-development essentially and supply of intravenous nivolumab biosimilar, referencing one of the world's most widely used cancer immunotherapies. Goldman Sachs stays bullish on Page Industries, raising the target to 48,000 rupees per share from, and says essentially that the price hikes, improving volumes as well as stronger EBO experience, which is exclusive brand outlet experience, as well as the online growth is underpinning the long-term demand visibility of the counter. Stock was up almost 2.5% today. Zaggle Prepaid is in focus after entering a 5-year agreement with APAC Financial Services to provide its Zoyas platform and expense management solutions. Now, it is strengthening its SaaS offerings going forward as well. Shares of transformers and rectifiers surged by over 6% after the company secured over 1,000 crore power grid order, boosting investor sentiment as well as strengthening its order book visibility. Stock continued to be up and all about today. Eicher Motors was the top loser for the Nifty 50 and slipped after the Delhi government cleared the EV policy for the state, encouraging more electric vehicles. Now, this move draws a hard line under the capital petrol and CNG two-wheeler trade and leaves Eicher Motors Royal Enfield brand exposed at this point of time. They just carry one electric model that is under the Flying Flea brand, and that's despite Royal Enfield's commanding market position. Delhi contributes to about 3.3% share of the overall sales for Eicher Motors, and hence with no EV alternative, this will be something to watch. It comes in on April 1st, 2028. Now the government is in final stages of issuing an approval letter for Dixon Vivo joint venture. Now, sources say that the venture nears the final node after the interministerial panel clearance earlier this month, marking a key regulatory significant progress on a joint venture that's been stuck for 19 months now. OYO is checking back into Dalal Street. Now, the parent firm Prism has filed for a 6,650 crore rupee IPO. All fresh money, no exits from the existing investors. Big names like SoftBank and Ritesh Agarwal himself are staying put, signaling confidence at this point of time. Now, the focus is clear. Clean up the balance sheet and back growth even as profitability improves and key overhangs fade away. Gold prices are on track for their biggest quarterly decline in more than a decade. Now, the precious metal is heading for its sharpest fall since 2013 as a hawkish US Fed Reserve continues to weigh in on investor sentiment. Now, expectations of a higher interest rate for longer have strengthened the dollar and reduced the appeal of non-yielding assets like gold. WhatsApp is working on a new feature that could make chatting more private. Now, the platform is expected to let users connect using unique usernames instead of sharing their phone numbers. Now, that means that people will be able to start conversations without revealing their personal contact details. Now, the feature is aimed at improving privacy, especially when messaging someone for the first time or joining group conversations. Prime Minister Narendra Modi is likely to travel to the United States and Canada in December for a series of high-level engagements. Now, the visit is expected to include the G20 summit as well as talks on strengthening economic ties continue. Now, a key focus could be progress on the proposed comprehensive economic partnership agreement with Canada as well. At least 30 people were injured after a fire broke out at a naphtha pipeline inside the Haldia Petrochemicals plant in West Bengal. Now, the blaze triggered a major emergency response with fire tenders rushed to the site to bring the situation under control. The injured have been shifted to a nearby hospitals for treatment, while the cause of the fire is yet to be confirmed. The Kerala High Court has ordered a swift investigation into the alleged irregularities in the Sabarimala gold plating case. Now, the court directed the special investigation team to carry out a thorough probe, stressing that no aspect of the case should remain unexplored. Now, the High Court has also called for a time-bound investigation to ensure accountability. The case relates to allegations surrounding the use of gold for works at the Sabarimala temple. An India-US trade deal could be just around the corner. The US ambassador to India, Sergio Gore, has said that the negotiations are now in final stages, with only the last 1 or 2% of the discussions left. Now, the remarks signal that both sides are close to resolving the remaining issues. Once finalized, the agreement is expected to boost trade, strengthen economic ties, and open up new opportunities for businesses in both countries. Iran has dismissed US President Donald Trump's claim that talks are underway between Washington and Tehran. Now, Iranian officials say no direct negotiations are taking place with the United States. However, Tehran has confirmed that an expert delegation will travel to Qatar later this week for separate discussions. Now, the death toll for the devastating earthquake in Venezuela has continued to rise. Now, authorities have actually said that at least 1,700 odd people have now lost their lives, with rescue teams still searching through the rubble for survivors. Now, thousands have been injured and many more have been displaced as entire neighborhoods were flattened by the powerful earthquake. Now, emergency services remain on the ground, while aid agencies are stepping up relief efforts for those affected. Morocco has pulled off one of the biggest upsets of the FIFA World Cup, knocking out the Netherlands in dramatic penalty shootout. Now, the round of 32 clash finished the draw after the extra time before Morocco held their nerve to win the shootout 3-2. Goalkeeper Yassin starred with a crucial save, while Ismail Saberi scored the winning penalty to send Morocco through. Germany's FIFA World Cup campaign is over after a heartbreaking penalty shootout defeat to Paraguay in the round of 32. Now, the match finished 1-1 after extra time before Paraguay held their nerve to win the shootout 4-3. So the result sends Paraguay into the round of 16, while four-time World Cup champions Germany suffered an early exit from the tournament. It's another major upset in a World Cup already full of surprises, with Paraguay keeping their dream run alive. Japan's World Cup journey has also ended in a heartbreaking